4, 3.
We're live.
Okay, we'll call the Finance Committee meeting of the 1st of May to order. All members are present and accounted for. We do have a request from Finance to add to this agenda an FT, which is a transfer, and then a very interesting looking document from Brian Snyder. I don't know what the sense of the committee is. I think, Takia, you told me that they want to get this on the draft agenda, which is being formulated today for the next council meeting. Is that correct?
That is correct.
All right, so I will entertain a sense of the committee. My sense is if we get to it at the end of the meeting, if we have time, that would be fine. I don't know, and maybe when Jody gets on, we can find out about what time sensitivity, or Katie's.
Jody is on.
Pardon me?
Jody is on the call.
Oh, Jody. So are these things that if we put it to the end of the agenda today and we don't get to it, will be damaged in some way? I mean, we're going to be meeting every day next week too.
Can you give me which numbers you're looking at?
Well, I'm looking at FT 5-20, and then
It's just one for COVID.
Oh, just the one for the big one that divides up into different departments? Okay.
Yes.
So, it's not, you can do it at the end of the meeting. It's just, there are some departments that are way over their authority because of supplies and contractual services and capital outlay for COVID items.
Right.
And we need to get money back into their budget. So we've asked for a contingency account transferred to those departments. And
that's what the document we have from Brian Snyder is the backup I see.
Yeah, there was an attached spreadsheet that gives you the detail of the items that were purchased that back that up.
Well, I think committee members, we would want to try to get to that if we can, either now or at the end. What's your sense?
I'm trying to find it. Is it attached to today's agenda?
No.
No, it's not.
Send it to us in an email.
I sent it in an email this morning to you.
I'm sorry, you sent it when?
This morning.
So is it just a matter of approving the transfer from contingency into specific departments, Jody?
Yes, that we had put together a schedule. Brian Snyder bought a lot of the things through purchasing, and of course, he's got a very small budget. And there are other departments that have surpassed their supplies budget, et cetera. And we had no snow this year to speak of, so we have to use the contingency for snow. So we still have 400, after this transfer, 300 something.
I'm out. We have to first amend the agenda if we're going to take this up.
All right.
Is there a motion to amend the agenda to include this? It's really one item. It's 2 pieces of paper on our agenda for today, FT 5-20.
I'll move to make a motion to add FT 520 support to our agenda today.
Second.
All right, all in favor signify, is there any discussion? All in favor signify by saying aye.
Aye.
Okay. Now that it's added, shall we go ahead and dispatch it or get back to the regular agenda, which is to approve the minutes from the last meeting and then get into our deliberations on fees and fines?
Let's talk about it now.
I concur.
That's my sense as well. All right, so I think, Jody, you've already pretty well explained it to us. This is money coming out of the contingency fund and going to various departments, MIT, Planning and Zoning, Fire. The sheet that Brian has given us, Brian Snyder, gives us backup detail to the penny. So I think it's pretty self-explanatory. Committee, are there questions or is there a motion?
I'll move recommendation to support FT 520.
Second.
Is there any further discussion? All those in favor of the motion signify by saying aye.
Aye.
The ayes have it. All right.
Mr. Chair, may I quickly ask Jody? I suspect these are all funds that are going to be reimbursed to us.
Yeah, I hope so. Those will all go on reports, probably FEMA reports. I see Dave Mandel's on here. And or other programs will reimburse, will reimburse us for these eventually. Or most of them, if they qualify.
Okay, thank you.
I do have a bit of good news, and I saw the fire chief on here somewhere. Oh, there, hello. He's on here somewhere. We did get some money from HHS for ambulance-related services. I'm not even sure why we're on, it's because we do these ambulance services, and it came from HHS for Medicare ambulance trips, I guess. And it just came in a bulk amount. We didn't even know what it was when it got here, and we just put the pieces together yesterday, so.
So
Can you
that'll
tell us?
be adjustment to fiscal 20?
Yeah, $68,000. We have a
Okay.
little bit of paperwork to get through, though, to make sure we can accept it under their terms and conditions. And with federal money, that's always important to review the terms and conditions. But
Yes. Okay. Sheila, did you have something? Because we're moving on to approving the minutes if not. All right.
No.
I would accept a motion to approve the minutes from the whatever meeting this is, April 29th meeting.
So moved.
Second?
Any discussion? All in favor signify by saying aye. Aye.
Aye.
The ayes have it. Thank you, Takia. All right, now we move into the committee discussions and deliberations. On tap today was discussion of fees and fines. And I would recommend, we did receive from Katie a breakout of the red line fees and fines, but I'm going back to our April 27th meeting where we have our
R26.
Where's our 26?
And did you want the
Which
red
does have
line
as an
only?
attachment, the fee schedule with all the red line changes shown. And I would propose to the committee a couple of different things. One, we have David Heyer here, who can give us now a presentation on the water sewer study and the proposed changes. I don't know whether there's a presentation. I think there is, Marcia, a presentation that we could look at.
Yeah.
All right, or we can go just through the fees and in the order they show up, which would be a warning to all of the department people who are here, unless there's some other notion from the committee. We were just going to start with the very first one, which is from Title 2-52030, and go on down wherever the red lines show up. So I see John Manessa here. You probably don't show up until Title 17. You can tune us out until we get to you, or whatever your druthers are.
He's probably gonna do that anyway.
Yeah, that's true. We didn't have to give him permission.
Yeah.
He's used to tuning us out. He's been involved with the short-term rental stuff. Committee, can we go ahead and get the presentation from Public Works from David Heyer on the rate studies?
Sure, if they're ready.
Marcia
Yes.
said they're very short.
Yes, we're ready. I'm going to have David Hyder, who works for Stantec, who has been doing our rate studies for the last several years. Very, very knowledgeable about all aspects of everything that we do, actually. So he has a water and sewer rate study and a stormwater rate study. So we're going to start with the water and sewer rate study.
Okay. Well, good morning, everybody. Good morning.
Morning.
I will try to keep, I think in terms of the most interesting presentation today, it's probably the watershed. So I'll try to keep this presentation fairly brief. Can everybody hear me okay?
Yes.
Yes.
Okay, perfect. All right, so we'll get started. If we could keep advancing the slides. In terms of what we're going to go over for water and sewers, just to talk about the fund financial plan, what it looks like in terms of how we're doing revenues versus expenditures. Then we'll look at some recommendations for some pretty minor adjustments just in the water rates, what that looks like to customers in terms of impacts, how you stack up with some surrounding jurisdictions. And then this year we were tasked with also looking at your capital charges. So we'll wrap up with that. So if we can keep going to the next one. Next one, please. So what we do in terms of the financial plan is essentially we have a financial model that looks out over a 10-year period. And that model's forecasting both expenditures on the system. So we take your budget for fiscal year 21, escalate that on a line item by line item basis, looking at historical increases, add in any existing debt you have, as well as your capital improvement plan. And that gives us our expenditures on the system. And then we compare that with the forecast of revenues based on what we're seeing in terms of customer usage and things of that sort. And then the comparison of those two is matched against some key metrics. Are we maintaining the cash that we need going forward? And are we meeting our debt service requirements given your bond covenants? And so if we look at the next slide here, this is, and that's interesting, the numbers aren't showing. I'm not sure exactly why, but this is essentially a pie of the existing expenditures for both the water and the sewer system. And for whatever reason, the numbers are not showing up, at least from my view. But you can see the proportional breakdown of costs on the system. So this is for fiscal year 21, your O&M expenses, your existing debt, and then the PAYGO funded capital.
And O&M means operation and maintenance. What does that mean?
Yes, that's the ongoing operations and maintenance.
That's the same question.
Mm-hmm. Yeah, that's your staffing, it's your electricity, chemicals, things of that sort.
All right, thank you.
Yep.
And Pi does a good job of giving us the sense.
Mm-hmm. Sure. So we have the actual numbers if we keep going a couple more slides. I think slide 7. If we can go one more, there we go. Okay. So this is a detailed breakdown as I was mentioning in terms of the costs going forward. So the operating O&M expenses there is in that first line item. So you can see you're at about 4.8 million in operating cost for the water system in fiscal year 21. And then, as I mentioned, we escalate that forward based on historical indices. The next section shows your capital expenditures. So those that you're PAYGO funding from current revenues, 1.2 million in fiscal year 21. Your existing debt service on the system, 3.1 million. So that gives us our total capital of 4.3. So when we sum up that entire column there, we have our total expenses for water in fiscal year 21 are about $9 million. And you can see how that escalates going forward. So the most important comparison then is what's on the next line, which is our current water revenues. And if we, I'm sorry, next line, if we can go back real quick. What we can see on the water side is that our revenues are projected to be below our expenses over really the entire projection period. And this is your current water revenues, assuming we don't do any rate increases. And so we do have some shortfalls that we're seeing on the water side. Conversely, on the next slide, on the sewer side, we do the same thing and we add up your little bit higher operating expenditures, but less capital. And we come down to that final section there, we can see that the expenditures on the sewer side are actually less than the revenues over the next couple of years. And the primary reason for that is that you are getting some nutrient credits at the shared wastewater treatment plant with the county. And so that's reducing some of your sewer cost. And that's anticipated to happen over the next 3 to 4 years. But you do see that by fiscal year 24, we are forecasting that your sewer expenses would be above your revenues.
David, how are you going to tell us what we should do with sewer?
Yes.
Okay, thank you.
Yep, no problem. Okay, so if we play this forward, and I mentioned we look at some metrics on the next slide, if we assume that we don't take any action at this point, just kept our revenues the same on the water and sewer side, this shows the ending result in 2 categories. So the top chart shows your unrestricted combined cash balance at the end of the year. So you do have a fair amount of cash on hand right now, but without any adjustments due to those shortfalls on the water side, you would exhaust all of your cash within the utility by fiscal year 26, your unrestricted cash. So that's not necessarily a sustainable forecast. And then all the numbers down at the bottom just represent what you need to do in terms of your debt service. So you've made agreements with lenders that you will have revenues that are generated enough to pay your debt service. And you need to have a what's called a debt service coverage of 1.5. And so you can see under this forecast that you drop below that 1.5 debt service coverage in fiscal year 24. And essentially what that means is that the net income for the system has to be 1.5 times the annual debt service. And so these are important metrics that show us that, you know, we need to do something going forward. And so what we've, on the next slide, we can start looking at what we're recommending. Again, the city has a practice of looking at the rates every single year. And so what we're recommending for fiscal year 21 would be a 4% increase in the water fees. No increase in the sewer rates, because as we showed, at the current point in time, we're generating enough revenues. And then we do look forward, as I mentioned, over a 10-year period. And so we do think you're going to need ongoing increases in water. At this point, sewer, it looks like they could be pretty minimal, but, you know, again, you evaluate it every year. And so what's recommended for fiscal year 21 would be just a 4% increase in the water rates.
And David, the code says that the Public Works can do these changes for any rate increase that's, is it 5% or lower, or is it?
Yeah.
So
it's up to 5%.
Mm-hmm. No council action other than you're making us aware of it would be required for fiscal 22 or 23 because it's 5% or lower.
Correct.
Thank you.
Yep. And so what this looks like on the next slide, with those increases, with the 4% and the 2%, we're showing that, you know, you are continuing going to be dropping down your cash balance, and we are assuming that you're going to continue to increase water rates at that 5% and then perhaps 2% on sewer. If everything played out, you know, over the long term, it's not necessarily sustainable at those levels, but that's a long projection, and we see things, you know, tend to vary year to year. So certainly sustainable for the near term with those types of increases.
So can I ask a question, because we do get questions from constituents about why does, and in fact, I get it from my barber, usually when she has a razor trimming the edge of my cut. What is it that is the driver of the cost? Is it the chemicals? I mean, we've launched a fairly automated water treatment or water purification plant. So what is driving these continual increase in the cost of producing clean water?
I think the primary driver, so you do see inflationary increases in your in staffing and things like that. So, you know, if you have no growth in revenues whatsoever, your expenses are going to go up by, you know, CPI or something in that range. But the key driver is the continual need to reinvest in the system. You've taken care of the water plant, but the big investments now are in the distribution system. And so it's that continual addition of reinvestment in the system. You do have a fairly old system, and you've had the benefit of, you know, the investments that were made, you know, 80 years ago, and now you're having to take care of those and address them. That's really the biggest driver.
Okay, so if there is not some note to that effect in this report, that would be, Marcia, I think that would be a helpful explainer to go into this. And I'm assuming, Takia, that we will get this and that it also can be made part of our report to the council, so the council members will all have this. So Marcia, I don't know, I'm interrupting David as he's trying to give us this report, but I think, is there later on, is there discussion about the underlying drivers of increasing costs? Obviously, we've heard inflation, we've heard salaries, but it sounds like one of the real big ones is, last I knew, we had $90 million worth of obsolete pipes in the city, and we have an ongoing program to continually replace them. Is that part of this package also?
Yes, that's part of this package. And I think you might remember that I indicated that we would be starting more of a concrete asset management program. We've added some new positions, some new employees who are going to be doing a better job of determining exactly what direction we need to go, you know, risk assessments, that sort of thing. So, yes.
Thank you. Sorry for the interruption.
Oh, no, that helps provide context. Okay, so just a few more slides in terms of what this actually looks like. So the next slide, next section really shows this is what the actual fees would be. So just as a refresher in terms of how people pay for water and sewer service, you have a quarterly fixed charge regardless of use based upon your meter size, and then you're charged based on metered water for both water and sewer. So the water charges here are increased by the 4% as we recommended, and the sewer charges would remain the same, obviously, because we're not doing any type of increase. In terms of your charges, you do have an inclining block rate, so the more water you use as a residential customer, the more expensive that water becomes. And then for non-residential, it's just a flat rate.
David, may I ask, Mr. Chair, may I ask him a question?
Jump right in, please.
Okay, can you tell us what the 2020 rates are? You're showing the new rate with the 4% increase in the percentage, but could we see the dollar amount, or is that somewhere else?
I don't think I have the existing rates in the presentation.
I have the first tier. The first tier rate is $372. I don't have the rest of the tiers.
Yeah, I can tell you here real quick. The first rate is $372. The second rate or tier for residential is $746, and then the over 20,000 is $1118 currently.
You're under the usage in the bottom chart. I was looking at the top.
At the fixed charge? Sure.
Yeah.
Yep. So the current fixed charge for water for 1 inch and less size meter is $1180.
Okay.
And that's the vast majority of the customers. And I think the next slide actually is pretty helpful in terms of what the impact is. So your average customer uses about 4,000 gallons per month or 12,000 per quarter. And so right today, they're paying $160 a quarter. So this ultimately results in a $3 per quarter increase, or $1 per month.
Mm-hmm.
So not a huge impact, but it does have some impact.
Mm-hmm. And your 22 and 23 rates are your recommended increases for those years?
Yeah, that's the 5% and the 2%. But again, given the city's practice and policy of looking at every year, those are just estimates at this point.
Mm-hmm. Okay, thank you.
No problem.
So if I could continue Sheila's line of questioning, I was looking through the resolution. Are the water and sewer rates and other things not in resolution 26-20 because we're not changing them? How do we propagate those rates, and where would people go to find it in the budget legislation?
So Alderman Arnett, those two are not part of the fees. They're a separate section in the code. And so we will put this report up onto the city website. We'll put it on Public Works, probably on Finance as well. Yeah, and if there's other ways you want us to disseminate it, Jody, do we normally put that in the bills, what the increases are each year at the beginning of the fiscal year?
Not that I've seen. We went through the bill the other day, it was not in there, and those are the only bills related. And I think the code says something about we can increase the rate up to 5% without action. But I don't know if there's any attachment to the code or the fee schedule. The fee schedule would include these, right?
No, it doesn't. Then, and I was
Water and sewer are separate sections in the code, so they're not part of the overall fees.
So
And
I
I
would
would-
look at the code to see if the fees are ever, they start with a base fee from years ago and say you can raise it up to 5%. Or if there's nothing in the code with the fee in it. I don't know that off the top of my head.
No, it is in the code, and it says that it can be increased up to 5%.
Well, we keep the,
administratively.
we publish the fees on the site, and inform the customers when we have a rate increase every year on the bills.
But should it be part of either the resolution or the ordinance?
That's a legal question.
Right. I'm just, in terms of, even if we're not changing them, don't we need to recognize somewhere what they are?
No, because then that becomes something that has to be approved by the council, and those both are excluded from that. So they're done separately. That's the way we've done it for the last 5 or 6 years.
I'm not saying that we're doing anything wrong or different. I'm just wondering, where would one go on the city's website to find out what the current fees are for water and sewer or any of the other stormwater, all of those things? Because they need to be promulgated somewhere, right?
That's what I was saying. We will put we'll put this report up there. I think the finance website has a listing of the water and sewer fees separately.
So I just went on
If not, then we
website.
can post it.
So I just went on the website, Chairman, and I typed water fees or water rates, and I got the chart of what's in existence right now.
Okay, and that would change every year as we get into a new year, and that's when they'll see these changes in the water rate?
Yes, it should.
Okay. Just occurred to me to ask that question. All right.
Okay. Next slide, we just show a larger customer, so sample non-residential, and obviously because they're using more water, their bill is higher, equates to about a $14 per quarter increase between current and fiscal year 21, or a little bit less than $5 per month. And then the next section it's always informative just to see what other folks are charging. And so we do have some comparisons here. And this is the quarterly bill using 12,000 gallons for some surrounding jurisdictions. So you can see where Annapolis is currently, where you'd be with the proposed, and then how you compare to the surrounding jurisdictions.
So if I could interject here, when John Hammond asked me why he pays more for water in the city than the county people, the large part of the answer to that is we have older pipes and we need to spend more money to replace and keep those up.
Yeah, it's a number of reasons. So that's definitely one of them. Another is that the county has, tremendous economies of scale. Many more customers to spread costs over. They're also growing pretty substantially. So a lot of their capital costs are funded through their connection charges and things of that sort. So it's kind of apples and oranges between you and the county, but the age of your system certainly has an impact.
A big part of that is the new water treatment plant as well. So if you look at the sewer rates county versus city, and the water rates county versus city, the city rates are higher for water because we just built a new plant, and as Dave said, the economies of scale. But on the sewer side, where they've had to do a lot of work at their wastewater treatment plants, I believe they were, and I think they still are, the sewer rates are higher in the county than they are with the city because of that.
Mm-hmm. Yep.
But we don't want to make the economies of scale argument to John, because back when we were trying to decide whether to do our new plant or join them going under Route 50, he made that argument of why we should join with the county. But I recall we did a lifetime study, and we came out doing our own or doing with the county. At the end of it, we were indifferent that the same amount of long-term cost if we built a new one ourselves or joined with the county and tunneled under Route 50.
Yeah, and that's correct. And I think they were essentially equivalent over the long term. The reasons were that they do have economy of scale in their operations, but their administrative costs, if you'll recall, their administrative costs are much higher than the administrative costs of the city. And so that caused them to be equal. And so since they were equal, there was no advantage to be gained by turning over to the county.
Okay, I do get this question, not only from my barber, but from John. So I'm glad to have this information so I can respond to them. Thank you.
One other quick point on this one is that we're comparing current rates as they're published today. So it's likely that many of these jurisdictions will be increasing rates this coming July. And so, we're showing that you jump above Salisbury in this case, but in all likelihood, the rest of these communities will be increasing rates as well. So it's a bit of an apples and oranges comparison from that perspective.
Thank you.
Okay, so one final section here in terms of the water and sewer studies, the capital charges. And just to refresh your memory in terms of what these are, these are the charges that are currently collected by the city when a new customer joins the water and sewer system. And so if you have a new customer join and they connect, you're recovering the cost of constructing water and sewer capacity that you built in anticipation of them coming, with the idea that growth pays for growth. And these fees are generally scaled based upon units of service or the potential demand that's going to be placed on the system. So if you have a larger customer join, they pay a higher fee. And so as I mentioned, part of our scope was to review the level of these current charges. And so that's what we've done. On the next slide, I have the calculations just to show, and you can keep advancing it here. This is how the calculations are calculated. So essentially, we take the value of the system, which is the depreciated value of the system in place, escalated to the current replacement cost. And then if you have any planned expansion projects, that would be added in. And so that's the value of the system. We then take from that the net present value of the outstanding principal on debt or any assets that were donated. And then we divide by the total capacity in the system. So essentially what we're doing is we're trying to price a unit of capacity in the system. And this is a typical standard approach that the American Water Works Association publishes. And so this is kind of the industry standard approach of how to look at these charges. And so the next slide shows what we've calculated. And so right now for a single family home or one equivalent residential unit, the current cost of connection is $6,500. So $4,900 for water, $1,600 for sewer. And based on the current cost in the system, the capacity, and doing that calculation, we've calculated that the water fee, our capital charge, should come down to $3,400. The sewer should go up to $2,100. And so you'd have a combined of $5,500. So in this case, it would actually be a reduction in the fee. So unlike water and sewer rates, which are based on the actual cash flow and the annual needs of the system, these fees are based on the actual cost of building capacity and having that capacity. And so you would see a slight reduction in revenues from these fees going forward with these recommendations.
And these fees are in the resolution, are they not? Don't we have a section that does the connect fees in the, I'm not sure which part of the fee schedule that would be. Or is it not? What part of the code would these connect fees fall under? Here's fee to dig up. Are they in the resolution?
I think they are. We'll look for those,
Okay,
Alderman Arnett, and let you know. But I think these are in the schedule.
right, okay. But,
May I ask a question, just for clarity? These are for new construction costs? New connections?
You can-
Yes, correct.
Okay.
Yep.
All right,
Okay. So that's it for water and sewer.
okay. Are there questions from the committee or any others?
I have just looked at the fee schedule and I found 17.28.09 connection charges are in there. But there's no page number in this fee schedule, I think. So
What?
17.28.090. Just so you know.
No questions from me, Mr. Chair. Thought it was an excellent presentation.
Yes, I thank you for the presentation. But Jody, you were breaking up. I couldn't hear. Which code section does this fall under?
17.28.090.
Okay, all right, thank you. All right. Yes, I agree with you, Fred. That was a very helpful presentation, and look forward to getting that in Granicus and putting it in our report. Is there another presentation that you were going to give us, David?
Yes.
Thank you.
So we'll jump right into this one. We can probably cover some of the beginning stuff pretty quickly because it's similar in terms of the way that we look at things. But this is what we would term your stormwater fees or your water restoration fees. So I'm going to go over a little bit of background, then we'll talk about the financial plan, and then we'll probably spend the most time talking about the fee structure. So I think that's the most substantial change and probably what's of most interest. So just in terms of your system, folks don't generally realize what an extensive system you have when it comes to stormwater. Water and sewer, maybe they have a better sense for, but you do have a very extensive stormwater system. Got 58 miles of stormwater mains, 2,500 catch basins, 2,000 manholes, 41 stormwater outfalls, and then the roadways and the curb and gutter serve as components of the system as well. So 307 miles of that. And so the map here just shows those assets in terms of the stormwater system. So an extensive system that you need to manage and have to invest in. So if we go to the next slide. So just a little bit of background. We have been engaged in the past to look at this. One of the big drivers, I guess, for your stormwater system over the last few years has been your new MS4 permit, which you received in April of 2018. In anticipation of that, you did raise the fee pretty substantially. I think it was back in 2017. But as part of the study that we completed in 2018, we did recommend a modest increase in the stormwater fees of 2%. And we also looked at the rate structure, the fee structure, and made some suggestions in terms of how that could potentially be changed. The city did take action and increase the fees by 2% in fiscal year 20, and really determined that we really needed to dig in a little bit more in terms of looking at implementing a modified fee structure. So we can go to the next slide. So in terms of the scope of work, very similar first component here, where we're looking at the development of financial plan. So looking at the cost on the system, looking at whether your revenues are sufficient to meet those costs, and then developing a financial plan if the revenues are not sufficient to meet those costs. And then the second component was to evaluate the fee structure. So we did get updated impervious area data. We looked again at the fee structure and how you could potentially change it to make it a little bit more equitable. And then we're going to be assisting with some public outreach and helping you implement the recommended new fee structure. So we can go to the next one. So the first section here is the financial analysis. And so again, we do the exact same thing as we do on water and sewer. We look at the revenue requirements over a 10-year period. The key drivers there, similar to water, are the capital. So you have some capital improvement plans that identify the MS4 compliance costs and the watershed implementation plan. So those projects are really the key drivers. We then look at the revenues that you're currently generating. It's a very static revenue stream. So unlike water, which is based on metered use, this is an actual fixed charge that's charged to parcel owners in the city. And then we evaluate again, are we maintaining our balances and meeting our debt service coverage? And so the next slide doesn't have the numbers again, but gives you a sense for the similar breakdown. O&M costs, so the operations and maintenance of the system, you have a little bit of existing debt. And then the big component you can see is the cash funded or the PAYGO funded capital. So the next slide has the actual figures. So you can see your operating costs are about $870,000 in fiscal year 21. And we make similar assumptions in terms of increases. This forecast right here assumes that you cash fund all of these capital projects, so not issuing any additional debt, but we'll talk about that in a moment. You can see in fiscal year 21, so your total stormwater expenditures would be about $2.39 million. You're generating about $1.53 million from your current stormwater fees. And so the picture here looks pretty similar to the water system in that the stormwater revenues are not sufficient to meet the needs. In particular, you can see in fiscal year 22, there's a pretty significant capital investment. And if you were to cash fund that, your revenues would be substantially short of your expenditures.
David, what is
Yes.
the capital project that for 22 that causes it to double?
I believe that's in Marcia could probably help me. I think that's the Truxton. Is that right? Truxton project.
Cool.
Yeah, it's
I-
the MS4 projects we hired Green Vest for. We're doing the design and the construction starts in 22.
And that's at Truxton Park?
Oh, and it's also for the Truxton Park flood mitigation project. Yeah, so we're doing both of those.
Yeah,
Right,
it's really-
Marcia?
we have a series of projects that we have, planned out, and we have been working with Greenvest, as David said, who has the contract that's under the capital improvement plan. So yes, and if you want to see a list of those projects, we can provide that. I don't have that with me.
Marcia, is that the watershed improvement plan? Are
Yeah,
those
it's
the
all
projects?
related to the watershed improvement plan. It's all part of MS4, which I'm sure you remember has many different aspects, but the projects are a very expensive aspect of that.
So I think Judith's questions is right on point, and it would be helpful if we could, along with this, include a list of those projects, just for the benefit of all the council members when they're looking at this.
And it's also in the CIP. So the CIP has a separate breakdown for this fund. So those projects are all listed in the CIP.
And
That was,
yes, Alderwoman Finlayson asked about the spike in 22, and that is where a lot of the Truxton Heights construction is $2.9 million in 22. So that is one of the major causes of that spike.
so in the CIP, is there a sheet with
For
all
Truxton Heights.
projects on it under stormwater?
Mm-hmm.
Okay.
Yes, if you look in the page 11 of your capital project, your capital improvement book, they're the last, the projects are listed by fund, and the last fund is the Watershed Restoration Fund, and it has 3 projects listed in it.
It's very helpful, yes. That ties it together.
And you will see there that 2.9 million does spike up the amount of monies they'll be issuing for bonds in 22.
Okay, but even on the CIP sheet on page 11, that's what I'm looking at, it doesn't break out to tell us what the projects are. Am I correct? Am I
So
reading?
if you look on
It does-
page 11, you'll find the 3 projects listed on page 11 for watershed restoration. Stormwater management retrofit. I hope, are you looking there?
That's what I'm looking at. So I thought there was breakout of what those retrofit projects are.
Okay,
But
so
they are-
if you go to the individual page, which is one of the
50.
last ones in the book.
55 and 56 and 57.
Okay.
You put,
Or specifics, we're gonna have to get Public Works.
right, there's no specific list of individual projects in those, so Marcia can provide that to you. It's probably a pretty long list.
Okay, but they're defined in the pages under that 50, whatever, 55, 56, 57.
The projects are there, but you asked for a list of what individual retrofit projects they're doing, and that is not there.
Yeah, those retrofit projects are usually more reactive when we have a failure in the storm drain system. So it's hard to predict what those may be because we just use that funding for when those types of issues come up to make major repairs in the storm drains.
Okay, I thought all of this was project-based, but they're not. It's in anticipation of.
So most of them are. This is one of the few that is more reactive to handle
Okay.
some of the bigger problems with the storm drain system.
Okay, thank you. I'm good.
Okay. All right. So next thing we can do is look at the metrics. So on the next slide, you do have some cash in the stormwater fund currently, a little bit less than $2 million. And if you don't take any action in terms of just kept things as they were, you're obviously going to deplete that. The black line here is essentially a minimum target that we want to maintain in the stormwater fund. And so with no increases in cash funding all those projects, we would essentially obviously deplete all the funds within the stormwater fund as it stands right now. So clearly not a sustainable approach. So one way to address that would be on the next slide is to not just take a pay-go or a cash funding approach to stormwater projects. Given the magnitude of these projects, they are long-lived assets. And so it's not unusual to use debt service. And so what we've come up with is using some cash in the next year, but then a balance of using cash and debt going forward to fund these capital projects. You can see that what that split would be. The red is the debt, and then the green is using the PAYGO funding or cash. And so as I mentioned, there's very, very little debt in the stormwater utility as it stands right now, but it's not uncommon to use debt to fund capital projects.
May I ask, David, the big jump in 22 is assuming that the capital projects that are listed will become debt
Yes.
projects?
Mm-hmm. Yeah, so essentially that 4.65 million that was identified on the prior slide, we're assuming a portion of that would be funded with debt. Because it is difficult, particularly as the projects become bigger in scale and as they jump around year to year in terms of size, to have a sufficient cash to be able to fund those on an annual basis. So,
And that
while we
does
wouldn't
show up, that shows up on page 11 of the capital budget, the big jump up in 22 and then
Yep.
back down.
Yep.
Okay.
So if we take that approach and use some debt to fund our capital, on the next slide, you can see what we're recommending. So we are recommending a 5% increase in revenues from the stormwater fee. And I say revenues because we're going to talk in a moment about the change in the fee structure. So different types of properties would see different types of increases. But overall, it looks like with using a mix of cash and debt, and that as it's planned right now, the execution of the capital plan, you need to do probably about 5% increases every year in the stormwater fees. And so what's recommended in fiscal year 21, again, is a 5% increase.
And will those fees again show up in the fee schedule, I guess, under Title 17? Is that correct, John or David, Gerald? Water restoration 17.
Correct. They're part of the fee schedule. So the
So
only ones that aren't is the water and sewer rates for our citizens. All these other ones will be.
But I guess my question is, in the resolution, for this, there's no red line change. And then when you go to 1728-050 or 040, I guess it is the sewer connection fees and those things. Again, we're recommending changes from these studies, but they're not showing up as red line changes in the book. So shouldn't, like, for example, sewer, 1728-090, sewer connections, this study in the previous presentation recommended reducing sewer connections. I'm seeing the $5,000 for the 1 inch, well, that's water. I'm just wondering, should these changes show up in the resolution, or are they not for this year? They would be for fiscal 22.
Right, so at least for the watershed restoration, we're not increasing the rate, we're only restructuring the rate. So I'm not sure how you would show that in the table.
Okay.
Certainly for some of our residents, it's going to go up. For some, it's going to go down. But overall, the rates are not changing. So I think that's why that's not redlined.
But some of these have a tiered fee structure in the fee schedule, and if the new stormwater fee is going to have a tier structure, we might have to spell it out in here, and that's probably a legal question, and we should talk to the city attorney about that. And I wanted to make sure that the change in the connection charges is reflected in this table, because I'm not sure the timing of when the table was prepared and when the connection fees were settled on. And maybe Marcia knows the answer to that.
I believe, okay, so I think we're talking about a couple different fees here. And first of all, before we even start this, I'd like to point out that we do have another one-page part of this presentation that shows all the fees for FY20 compared to all the fees for FY21 that David Hyder put together for us. And I think that will be really helpful if we look at this after these presentations. So
Oh, you mean let him
think,
finish?
yes.
All right,
Okay.
that sounds like a plan.
All right.
Before you go any farther,
Mhm.
will we be getting a hard copy of the PowerPoint presentation? I'd certainly like one if you could do that.
Yeah, we'd be happy to share it.
That'd be great.
Certainly. Okay. So we've been talking about financial plans, and now I'm going to shift gears a little bit and talk about the stormwater fee structure. So if we go to the next slide. And keep going, one more. All right, so unlike water and sewer, which are based on metered consumption, you don't have that metric for stormwater. And so the general trend in the industry has been to use some measure of parcel attributes to charge property owners for their contributions to the stormwater system. And the industry standard has been to use some form of impervious surface. So that's the surface on your property that doesn't allow water to infiltrate. And we know through studies that the more impervious surface, the more you use and contribute to the stormwater system. And so with that in mind, when we look at your current fee structure on the next slide, so this is how things are structured today. If you're a residential property, whether you're a single family, a condo, or an apartment, you pay $15.30 per quarter. And that charge is the same whether you're a single family home or whether you're a single apartment unit. It's $15.30 regardless. And then if you're a non-residential property owner, it's based upon the measured impervious surface on your property and where you fall into these tiers. So 0 to 5,000, it's $61.20, 5 to 10,000 square feet, it's $122, and then over 10,000, you can see it's almost $200. And so when it comes to non-residential, you could argue that you're using some form of a impervious surface, and so that's comporting with the industry standards. But if we go to the next slide, some of our observations in terms of the structure. It is very common when you look at residential properties, particularly just single family homes, to have all those properties pay the same stormwater fee. It can be very burdensome, obviously, to try to measure the impervious surface for all residential properties. But it's pretty uncommon for multifamily to pay the exact same because of the differences. So if I'm in a single family home, I'm charged the same as somebody who's in a maybe a studio apartment. And so that's one of the concerns we have with the current structure. And then on the non-residential side, you essentially have a cap on what people can pay. So if you have a really large parcel with a tremendous amount of impervious surface, the maximum amount you're going to pay is that somebody that has 10,000 square feet. So it doesn't necessarily scale with the potential impacts that those customers could have or property owners could have on the system. And so given those observations, we came up with two alternatives, which is on the next slide. So the first alternative would be pretty in line with industry standard, where you say, okay, we're going to charge single family homes all the same fee. And then you'd use actual measured impervious surface for other properties. As I mentioned, that is a common approach, but it is data intensive. You need to have the actual measurements of impervious for all non-residential properties. And it requires, accurate measurements of impervious if you're going down to the actual measurement versus using tiers. And we do have some concerns in terms of the impervious surface measurements, that they're not necessarily as accurate as we would like to use that type of approach. So we also came up with an alternative number 2, which is really just modifying your current approach, where you charge single family residential all the same fee based on the average impervious surface. And then for multifamily, we would charge them all the same fee, but not the same as single family. And that would be based on a ratio of the impervious for multifamily compared to single family, because they generally have less. And then non-residential would be based on just modifying the tiers to actually make them scale based on the impervious surface. So there's a lot of information there. Is there any questions in terms of those, what we looked at?
Well, clearly this is a policy decision. I guess I'm wondering what arena this will go into. Is this, David Gerald, going to be come to the council in the form of some sort of resolution to change the way we do it, or how are you seeing this developing? David, you're on mute. David, you're on mute.
Thank you. Sorry about that. So it's in the fee schedule under 17.10.180.b. And this is what we talked about a lot with the environmental matters over the last year about changing the structure. Because last year when we didn't do this, Alderman Savage expressed concerns that we should, incorporate impervious areas more into the fee schedule. So we've worked on this over the last year in response to those concerns. So we're happy to bring it to environmental matters. We're happy to bring it back to finance. If you want an additional discussion, obviously we're doing that now. But it is part of that fee schedule. So that's where it will be approved by the council, is under the fee schedule.
So I guess that raises 2 questions for me. First of all, since I sit on environmental matters, I also have participated in that. The method 1, is that not something where Sean Wampler and the GIS people can get a fairly accurate measure of impervious surface by lot, by overlaying our parcels, and then looking at the amount of impervious for each of the lots and the types of lots, the zoning, whether it's zoned single family, multifamily, commercial, and of course in the county, a big controversial item was how do churches with their large parking lots get handled. David, you had mentioned that alternative one was data intensive. I think that's true, but is it not also the case that we have the means to get that data?
So I'll just answer that first, and then Dave Hyder can jump in.
Sure.
So Sean Wampler was intimately involved with this project from the very beginning, because we relied on her for all of that information on the impervious area. So with that, Dave, you want to talk about her concerns? You know those better than I do.
Mm-hmm. Yeah, so you're right that we do have good data in terms of the impervious area, but the problem is, and this is, I should have had my GIS expert on the call as well, but the problem is the GIS imagery and then the property data were developed using different coordinate systems. And so they're not aligned in terms of the properties and the parcels. So I think it should be mentioned that alternative 2 is pretty heavily dependent upon impervious surface. It's just that it's not doesn't require as precise measurements. And so if you go to, let's say we go to alternative 1 and we're off by 500 square feet of impervious for a non-residential parcel, they could challenge that, and then you'd have to make adjustments. And so that's where the concern is. It's just, the data is good, it's just different coordinate systems. I think eventually, I guess first off, alternative 2 is a really positive move in the right direction, really increases the equity. ultimately, I think Sean's plan is to get the impervious surface to a point where, in the data, to a point where we could move to alternative one in the long term.
Yeah, that was my understanding as well. And it was a whole project where we were trying to move from our paper and pencil property lines to a GIS property line. And I thought that was well underway, but I haven't talked with Sean about it recently. But I mean, obviously either way, we're talking about some changes to the system, which do sound to me to be more equitable. I wish Rob Savage was on the line because I know he's also been paying a lot of attention to this. But David, it sounds like this would not be a change in the fee resolution for this year. It would be something that would come to the council and we might change it later on in the year, but we shouldn't be expecting to see any red line changes for this in the resolution.
It is a red line in the resolution. So it's under 17,
Oh,
10,
Yeah.
189B.
all right. I'm looking in the wrong place. Yeah.
Okay. Yeah, so 17, 10, 189B.
I'm looking at that page now, and I have been, and some of the fees are increased, and some of them are significantly increased. Is that because we're doing it using a different procedure? I'm looking at the third item down, non-residential 5,000 square feet
Which
impervious.
page, Vaughn?
Well, there are pages.
It's 1710.180.B. And mine do not have page numbers on them, so this is the red line copy that Katie sent us.
Okay.
So it's about halfway through the packet, I think.
Tell us the specific fee, Sheila. Are you looking at the $94?
Yes, no, I'm looking at the third one. Originally was $61.20, and now it's going down to $19.
Right.
So I'm just the single family dwellings increases by $3.70 or whatever. Obviously, we didn't have a multifamily dwelling class previously, so that's a new item totally. But then the third item goes from $61 to $19. I'm just looking for clarification. Is that where we're going? Are we increasing some, decreasing others? Or is it the procedures that we're using to calculate?
Yep, we're just about there actually. So if we go to the next slide.
We should let you finish and then we can.
No, it's good. So we're recommending going with alternative 2, which is a modification of your current approach. And as I mentioned, this is dependent upon impervious surface, so it does provide that equity. But what we're looking at here is essentially splitting the residential into 2. So we'd have single family. When we look at the impervious area data, the median impervious area on those parcels is about 2,100 square feet. So that would be our equivalent residential unit, which we would say is 1. When we look at multifamily, on average, or the median impervious there is about exactly half of a single family. So they would be treated as 0.5 ERUs. Then when we look at non-residential, we look at all the impervious surface, and we're recommending actually going to 4 tiers. You currently have 3. And we set the ERUs for those, which are multiples for the fee, based upon the median impervious surface within those tiers. So it'd be 0 to 5,000, 5 to 25, 25 to 80, and then over 80,000 square feet. And so you can see the number of equivalent residential units that would be associated with each of those. So if I, in simple terms, said that your stormwater fee was $1, single family would pay $1, multifamily would pay 50 cents, and then these would each scale based upon, $1, $5, 21, and 65. And so what it's doing is it's just essentially modifying your current approach, but addressing those equity concerns in terms of scaling. And then I do have, if we go to the next slide, and this is a bit into the weeds, but it's important because when you do a structure change like this, your number of billable units changes. So for single family, we're treating them the exact same. So residential would stay at 10,000, essentially 10,000 billable units. But with treating multifamily based upon their actual impervious, we would see fewer billable units there. So they're going to see a reduction. And then non-residential, because we have some big parcels that are going to pay more, we have more billable units. But at the end of the day, when again, using that dollar analogy, if we charge $1 per ERU, today we're going to get $24,000. Under this alternative approach, we're actually going to get a little bit less, $21,000. And so there's some redistribution that has to happen. So we do need to increase the fee for residential to make up for that redistribution. And finally, if we look at the next slide.
David, before you go
Yes,
on,
sure.
why didn't understand why the multifamily residential goes down? What happens to those?
Yeah, the reason the reason it goes down is because their impervious surface is generally about half of what a single family is. So they have their contribution to the system is a lot less. And so we're treating them more equitably by saying, well, when you're an apartment, you shouldn't be paying the same as if you're a single family home. That's essentially the bottom line.
Yeah.
Yep. David, will you have a breakout for the non-residential into the 4 categories? I'm wondering how many 80,000 plus people we're going to be hearing from pounding on our door.
Sure. I will say that about, let's see, and I'll have to give you those specifics, but you do about 40% of your non-residential properties are greater than 10,000 square feet of impervious. So there are quite a few. We can give you the specific distributions. I don't have it in this presentation, but I can follow up with that.
That would be interesting, because I know in the county, when they were doing this, they heard from various constituencies, depending upon how much of bite they were feeling.
Right.
And so we'd kind of like to know where the distribution is. It would probably be good if we can get it from Sean. You know, does Rhonda have more than I have, or Sheila more than I have, or where, however it falls across, because we'll each feel that when this goes forth.
Certainly. We have the data. We could provide even maps and things like that would show color coding on who's paying more or less. So we do have it for every single parcel. Slide 20 then shows what was being referenced earlier in the resolution. So applying this approach, these are what the fees would be. So single family would be $19, multifamily $9.50, and then each of the subsequent for non-residential. And they're all scaling again based upon their impervious surface.
But as we move forward, is the hope to get closer to multifamily units to increase the density to allow for more affordable housing?
I don't know that, I think it has that impact, Duan, to me, that we're lessening the burden on multifamily units, make a more equitable fee. So it will be to their benefit if I'm understanding the charts properly. And I think, as David said, a lot of that burden will shift to the single family people like me with a big yard and so forth. And then, of course, the rest of it is on the commercial side.
Yeah, the next slide is actually probably pretty enlightening. So this is the property categories, the total number of properties in those categories, what the current average bill is per property under the current approach, and then what it would be under the alternative approach. And so if you go down the list, you can see for apartments, the change there is pretty significant. You can see for The housing authority, that goes down. But the shifts that you can imagine, and then, the increases that you'd see would be those with really large impervious surfaces, the schools, things of that sort. And then all the way down at the bottom is the vast majority of your property owners are single family residential, and they would see that $3.70 per quarter increase.
Let's see. I have some data from Sally, Dr. Nash, that had the total number of residential units in the city at 17,000 plus. This looks like it comes close to equaling that number. You don't know what the total is across all properties, do you, David, by any chance?
For residential?
For all of these total properties, residential. Well, yeah, that's a good, so some of the commercial.
Yeah. We've got a lot of government in there, not all residential.
Yeah. Well, it'd be interesting to look at this versus some other numbers that we were looking at, in particular with regard to what Dewan was bringing up with accessory dwelling units and affordable dwelling units and all of those sorts of things. So this actually does mesh nicely with that conversation. And this is a very helpful table. Looks like churches go up. I'm sure we're going to hear about that from all the different congregations. Condominiums go down. This is going to be an interesting time for us on the political side of the ledger.
For property types, for example, like gas stations that are environmentally more dangerous, is there a way that you can increase the fee? Because I'm looking here, they have larger impervious surfaces, but it goes down actually. From 194 to 169, while a church or other areas go up.
Yeah, we didn't. There are communities. There's a few that take in the consideration the water quality. So our analysis is just assuming the impervious surface. So what's happened with those gas stations is that most likely they had 5,000 square feet of impervious, and so they're seeing a reduction because we're trying to make a square foot of impervious is a square foot of impervious regardless of which property it's on, is the way that we're treating it. And so the general shift that's happening here is, if you can think about it, that we know that multifamily were potentially we know they were being equivalent with a single family, and so when we make them what they potentially should be, and then you think of some of these larger parcels that have a lot of impervious, that's really where the shifts are happening. It does get more complicated when you talk about quality, because you could have a quality component and say, well, we know that water that runs off of a gas station is more detrimental to the environment than coming off of a church property or things of that sort. So there are ways to do that. It just gets a little bit more complicated.
I'm looking at housing authority. It's saying 79 properties. There must be a lot more in there than just HACA. Because HACA only has what, 8 or 7? And then there's some, a couple of others, but that must have a lot of Section 8 housing and all kinds of other housing.
Is this counting buildings or developments?
It's based on the.
How many buildings are within any one of our developments?
Okay, that's true. All right. Well, yeah, you're right, Jill. So when you think about Robinwood, that's one property, but it's a number of buildings. That's probably what accounts for what that number is.
David, do you know whether that's a good accounting of what that is?
I would have to double check. We got these from the property record, so I believe it's and Sean made the match. So, but like I said, we can for every
Dave,
single
that
property we have the.
Right, Dave, that should be residential units, right? That should be a count of the residential units within the housing authority's properties.
Right.
So David, I'm having a hard time hearing you. You
Yeah,
said they were,
it should be residential units within the HACA properties.
Right. Well, if Sean did it, I think we can pretty much rely on the numbers right. We just need to have a better understanding of exactly what it means. But I think, Sheila, you're right. It's the individual buildings on all of the housing authority properties.
That can't be accurate because I just counted Eastport Terrace and Harbor House, and we would make up for half of that 79 easily. So,
But you should. That's the two biggest ones.
yeah, but then you have to take into account Robinwood, Bloomsbury Square. I think 79 that's too small of a number.
Well, we can coordinate with Sean on that, but
yeah.
still, it's a very informative table.
Let me ask a question. I know, David, you used your matrix, your recommendations to come up with the changes. Suppose we decided we didn't want to go across the board and do, I know this is the equitable way of doing it, but suppose we didn't want our churches to increase or, some other categories that are increasing. Could we make those adjustments? Would they have to be done individually?
Yeah, the challenge. Those are certainly policy decisions, and I know, as Alderman Arnett mentioned, the county did a number of, and Jody was part of the process of the county going through and when they adopted their fee, and they carved out a bunch of exceptions and things of that sort. It'd be very difficult for us to come up with a structure that naturally does that because we're treating a square foot of impervious the same regardless of where it is. So you'd basically have to carve them out separately, because let's say you've got a church with 100,000 square feet of impervious sitting next to a shopping mall with 100,000 square feet of impervious. We couldn't come up with a structure that would not impact them both the same. So you would have to do some type of, and then to the extent that you do that type of adjustment, your revenues are going to be shorter than what we're forecasting. So you need to make that up somewhere else, or you just have less revenue.
And I would say that if you say, I'm going to not have the church in there, and then we have to collect the same amount of revenue from others, then you've just changed what you're trying to do and make everybody pay for their impervious surface. So you either have to decide, we don't want churches to pay and we're going to take the revenue loss, or let it stay as distributed. Otherwise, it's not equitable. I'm trying to make
I
it
guess
equitable.
that's a good point, Jody. And I guess the final point would be some of the impacts that the county was looking at were really astronomical in terms of going from no fee to a fee, and then they don't essentially have this tiered structure where they cap the amount that somebody can pay. And so by taking this approach versus that alternative one, there are some parcels in the city that have significantly more impervious than our highest tier. So we took the median for that, over 80,000 square feet. There are a couple parcels that have, I think there's one that potentially has like 500,000 square feet of impervious. And so if you were to do it purely on an impervious area basis, like the county did, the impacts would be even more substantial. And so for a church, given these times, certainly understand the issue, but the average church would see about $20 per month increase in this approach.
But we could add another tier, those properties that have I don't want to say excessive, but very large impervious surfaces. You said what, 500,000?
Yeah, I think that was the top.
Yeah, we added another class to the top. We could make up the difference for the churches.
You would
Yep.
generate. Yep.
Let me take a time hack here because we've got many other people, and actually I was going to suggest to the committee that we jump to parking fees, but it's pretty clear to me we're not going to finish going through the fees today if we're going to take it red line item by red line item. David Hyder, is there another slide, or are we?
No, that is it. I think the only other document was what Marcia had alluded to earlier, which was a comparison of the fees. So Word document or a PDF, I believe.
Well, I want to thank you for both of these presentations. I think they're very enlightening, and thank everybody on the committee for immediately and the council jumping in and sizing up the issues. Jody, I'm glad you bring your experience from the county. I watched that from afar and was happy I wasn't there, but clearly we're going to be there now, so we'll be able to get into this. So we'll look to your experience to help us through this. Are there any final questions on these two presentations from the committee?
No, I'm good. Thank you, David.
Thank you. I appreciate the opportunity.
Yeah, well, we appreciate what you've given us to think about, and maybe we'll appreciate the legislation that you've given us to work on. All right, committee. I'm going through the red line. I see at the end of the fees, there's a considerable amount of information on parking. I'm trying to figure out what we do. We also have Archie here with something that we've already talked about because of the legislation on pools, but there's other changes. David, Gerald, do we have a sense, I'm kind of looking at the red line, where most of these fee changes, it looks like there's some, in the 1600 section, there's a lot of changes. Water discharge permits, things that sound like they're planning and zoning and public works. And then we have the parks and recs, and we have the parking fees. You've got Ellie here. I'm sure she's going to be very interested in the parking fee discussion. How do we want to proceed, committee?
Mr. Chair, I would like for us to simply go through. I'm looking at the red line copy, and I'm a little confused, and maybe I don't have everything. I would prefer if we just go through and highlight what's different. You know, in order. That would be my preference.
We have the red line only version that we can put up if you'd like to see that.
Well, is that what we're talking about, starting with 10.16.160? That's the first item on the sheet that I have. And then Public Works, trash collection.
Now I have changes back in 6.04 of 140.
Okay, then I don't have.
Look, I know what schedule you're talking about when you say red line copy. I'm trying to find it here
There's
on
a
my
red
phone.
line and there's a red line only that you requested.
So Fred, if you go to Granicus for the Finance Committee meeting of the 27th and go to the attachment, the last attachment for fees is the red line. It's all fees, but in there, it's redlined all the fees that have changed. So the fees start with code section 2.52.030. There's no changes there. The first change you come to is 6.04104.
Is it on the 27th, you said?
Yes.
Fee schedule resolution first attachment, there's two documents there.
One is the last one, the bottom one is the red line. It is the fee schedule showing everything that is redlined.
My
Okay.
graphic is still go back before today. I don't, on my phone,
Okay. I printed out the one that Katie sent us.
That's the red line only.
yeah,
Yeah.
I mean, I don't have a printer, so I can't.
It
I
starts with,
do have something that Katie sent us titled FY 2021 fee schedule 04 something or other.
I just sent it to your email.
I mean, my preference is to work with the fee schedule itself with each of the changes in red line, and they fall in order of the code. The first one that I see on mine is a change in code section Title 6, 04140. And there's actually an important notation there because it says we need an ordinance. So that's certainly directly relevant to the council. This is the credit card processing fee. So these are changes that are being shown in the fee schedule, but are, I think,
Yeah, I got that.
yeah, it's possibly not ready for action in the fee schedule because it's saying we need to have an ordinance to set all of this out, I assume, on how we're doing credit card processing fees. And I don't know whether this is for people paying, say, the water bill.
Yeah,
like-
so, yes, we're incurring a lot of credit card fees, tens of thousands of dollars a year in credit card fees. Rec and Parks gets hit really hard. Harbor Master gets hit really hard. Water and sewer charges a lot. So what we did when we were putting this fee schedule together, I wanted to get that in there, and I had my merchant services company do an analysis to see what our average rate is, and that's what the 1 1/4 comes from. But what we need to do is we have to set up the authority in the proper section of the code so that I can charge the fee. And I need to get those established in the other section as well. So we made a note to ourselves that we need the authorization to go with this. And I've written to city attorney to get that drafted, but I'm not sure if it's going to be in time for this consideration or not. I was hoping to get it introduced in May sometime so that we could do them simultaneously.
Well, I just paid my water bill by credit card online, so I know exactly what you're talking about.
What we would do is we would then add a 1.25% to your charge and collect it from you.
So you're nicer than the Annapolis Yacht Club because they add 3% every time we pay our quarterly bill by a credit card. So, but I guess the question, and this is really a question for David Gerald and the city attorney, can we authorize these fees without having the appropriate ordinance in place?
My feeling is, and then Mike can weigh in, is that we should do the ordinance first and then come back and amend the fee schedule later.
Yeah, I should have had it in line already, but I've been kind of busy, and I've got to work with the city attorney to get the language in the right sections.
All right. So in terms of action by the finance committee, we would presumably recommend that we not make these changes. This is actually an addition, isn't it, to the fee schedule?
Yes.
So while I like the looks of these and I think they're necessary, we would probably not, we would make a motion or a recommendation to the council that we come back to those after we've had the proper authorizing legislation.
Mr. Chair, if it's not in the original fee schedule, that's attached to the budget, then we don't have to do anything with it. Jody can, just remove it, right?
Well, let's,
We need to take action on something that's gonna be, eliminated from, the fee schedule until we get the ordinance done.
So I believe this fee schedule would have been posted as an attachment to the resolution.
it is
So-
in,
But
it is
was
in the
this item,
resolution. If you look at the resolution itself, on the second page, you will see this, that not the red line, but the actual resolution, it says need ordinance. So it would seem to me that what the finance committee should recommend to the council is that these two items be taken out of the resolution until such time as we can have the legislation catch up with the fees.
okay, I will move that we, make a recommendation that these two items, the, credit card processing fee and the return check fee, be removed from the fee schedule until the proper ordinances have been, acted upon.
I'll second that.
All right, any discussion? All those in favor signify by saying aye. Aye. The ayes, I didn't hear any other ayes. Are there two other ayes?
Yeah, I said aye.
Oh, okay, I'm sorry, I didn't hear it. All right. So that is a recommendation from the Finance Committee to the council. The next one that I see is a change in 10-16-020, 016, I'm sorry. And it says plan fee increase from the rate study. So that's, we didn't hear that presentation, but it is something that City Manager Gerald told us about. So I would assume that we would recommend favorably on that.
Mr. Chair, I'll move favorable recommendation for fee change in 10.1.6.160.
Second.
Wrong,
Yeah.
but
Any discussion? All in favor signify by saying aye.
aye.
All right, the next one we have is 16-200, which is change from the refuse hauler permit, 6 to 10 vehicles, from $330 down to $270.
Move to approve that recommendation under 10.16.20, a reduction in the refuse hauler permit for 6 to 10 vehicles.
Second.
All in favor signify by saying aye.
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 Let's have it. Next one is 14.20.030, and that is 51 to 200 square feet. It says clarification. I don't know what we mean here. $130 additional. We're just adding the word additional. I think this is Marcia. Who's this?
This is a public works fee.
Okay. But are we leaving the fee the same and just adding the word additional?
Well, we're making it clearer. The way the fee was previously structured, it didn't make sense because it actually costs less when you had a greater amount. It was very confusing. I think that when it was updated previously, maybe there were some errors. So this clarifies exactly how much is going to be charged depending on the amount of square feet that are disturbed in our public right of ways.
Okay, but the change to the fee schedule is instead of just having from 15 to 200 square feet as the category, $130, it is $130 additional.
for the additional square footage. Okay, so when you have 50 square feet or less, it's $150. So when you increase that, you will pay an additional $130. Does that make sense?
I don't know. Does it make sense to the committee members?
I don't think it's clear at all. Because I was gonna ask if it should be for the 50 square feet additional also, but I think the clarification really needs to be in the second column. 51 to 200 additional square feet, I think it should be, is where addition should be.
Yeah, I agree with that. Confused me too.
We can clarify that language. So I think, the initial 50 square feet is $150. So if you go higher than that, then your fee becomes $280. But I think we can come up with some better language or whatever to make it clear that is how the fee will be charged.
So the next one I see is still staying in 0.20, down for each additional 250 square feet, and then we're just adding or portion thereof, and the fee stays the same at $60. So this is just a change in the title of the fee. Is that clear to the committee? We have
It is.
a change down about four more lines where we're portion thereof, so it's each additional 25 feet or portion thereof.
Yes.
Right.
Mr. Chair,
Yeah, don't we need to move the PowerPoint down a little bit? There you go. Okay.
Right. So these are wording changes in the title. They seem straight to me. Is there a motion to recommend, that we recommend to the council that they approve these wording changes?
Yeah, I'll move, Mr. Chair.
All right.
second.
Further discussion?
Before you go on, excuse me, is this still under 14.20.030?
Yes, there's, in the stub, Takia, there's some wording changes under the description of the fee. The fee is staying the same. We're just saying we are recommending the council approve that portion of this resolution with those wording changes.
Okay.
All right. Now, we move on. This is, next one I have is in Title 16-16. This is like watching sausage be made. This is under wastewater discharge permits. And it is changing the significant industrial use per discharge location, a 5-year permit from 1,660 to 5,385. And that says this increase is proposed by DPW based on costs, which is what we like to see our fees based on. So is there a motion to accept this change from the committee?
I'll
make
move.
a
All right, is any discussion? All in favor signify by saying aye.
You need a second?
Aye.
All right, the next
You
one,
needed a second for that one.
I thought Sheila did.
They both moved it. Sheila said
Okay.
it first, but we need a second.
I'll second it. Doesn't matter. I'll second it.
Okay.
All right, now we have a whole bunch of ones. This is an application fee 4-3-year permit. So that we're adding the word for in red line. And looks like we're striking out wording, but I don't see, I guess, because I'm looking at I'm looking at the actual resolution. So this is, it seems to me that the $100 fee stays the same. the application fee 4-3-year hyphenated permit.
So the 1-year permit is $130 and the 3-year permit is $100?
That's what it appears. So if you do 3 years, you get a discount. A
I
big,
think I need an explanation there.
Is Marcia still on?
I'm still here. I'm looking at my notes from when we prepared that. So first of all, this is all these fee changes you're seeing here are for the wastewater pretreatment program to protect our wastewater system as part of the Clean Water Act. So all the fees were restructured. So I am going to have to agree with that, the fact that this isn't clear. How there's an application fee for various types of permits. I think we need to clarify that one. I don't understand what I'm looking at right now. So we're going to have to clarify that one.
okay, so I guess committee, I would suggest that we, there's several pages with these changes. Maybe we can postpone action on this until we hear back from Public Works, and we can jump ahead to Title 1708-080, where it's, I'm sorry, we'll jump ahead to Title 1709-070, where there is a change. And again, this looks like the fee stays the same, but there's a change in units of land where we're taking out development in a couple of places and putting in units of land, 4,000 square feet or greater. Oh, this is our old friend, the Forest Conservation Act.
Which number are you on?
I'm on 1709-070.
Mine aren't, I don't have section number on my copy. Can you tell me what it says?
They're cut off.
How far down is it? What page?
Yeah, well, we don't have page numbers. That would be probably a good thing to do, would be to get page numbers on the resolution for the council's
No,
work.
you can
But
keep
if-
going down because he says.
Could we get it on the
17.
screen? 17.09.
That's what we're trying to do now.
Keep
Okay.
going. Got a long way to go. 'cause you
Yeah.
have several people.
We're trying. Give us 1 second.
It's a long way to Tipperary.
Okay, I got it. Fee in lieu of planning outside the critical area. Units
Yeah.
of land less than 40,000 square feet.
Yes.
So it's on page 10 of my,
Yeah, we're there now.
okay.
So fees look like they stay the same. These are wording changes in the description of the fee.
Mr. Chair, I'll move approval of all of these editorial changes in 17.09.070.
Is there a second?
Yeah, I'll second that.
All right. Any discussion? All in favor signify by saying aye.
Aye.
The ayes have it. Now we get to one we were looking at earlier today, which is 1710-180B. And here we have what we just heard about in the presentation. So we're changing the fees for single family, for multiple family, for all of these. And this does not show the level of detail where you were speaking, Sheila, to fees for churches. So I'm not sure how this squares up with what David showed us.
Alderman Arnett, this is the fee that would be charged to these groups these tier groups per quarter. What he was showing you with the list was, how does this new fee structure relate to the actual entities we have out there? What will happen to churches? What will happen to, commercial entities, that kind of thing. That was just a chart that showed you how this would be impacting the different types of properties. This is the actual fee behind those numbers.
Right, I appreciate that, but I think I'll let Sheila speak for herself, but I think when we saw that level of detail from David, we see that there's some information underneath these fees that would have differential impact on churches and gas stations and so on. These fees are just the overall fees. And I don't know how, Sheila, I assume you want to address that, but I'm not sure exactly how we do it. If we recommend approval of these fees to the council, that will be recommending approval of the fees for churches.
Well, we could, I'm trying to think of the term that the county uses, that David used. We could take out, well, first of all, where do churches fit into this? Are they non-residential? Could they fit into a couple of different categories? I guess 5,000 square feet of impervious surface, or up to 10,000, or up to 80,000?
Correct. They could fit in whatever category they would fit depending on their size. And you would have to talk to the city attorney about if you wanted to take some groups out of here and exempt them from the fee in some way. You could, there may be language you would add to it, make exceptions to the fee schedule. Or, but they would have, the city attorney would have to tell you how to alter this to make exceptions.
Okay, well, I would definitely be interested in exempting our houses of worship out of the list. And in order to pay for it, I think we could add another non-residential class for those commercial locations, businesses that have 100,000 square feet, for example. Because clearly there are some that are getting a deal and they've got considerably more than our bottom tier, which is 80,000 square feet. So
if I can interject, I think stormwater is stormwater, and I do share Dewan's notion that gasoline stations are maybe putting out something nastier than St. Luke's here in Eastport, but I'm not sure. It seems to me that maybe what we should recommend for this whole section is that we get more detail from Public Works to show those breakouts and also show the potential of having yet another big commercial classification, and that we recommend that this is an issue that the council writ large needs to take up and evaluate. I don't know, Fred, where are you? Because I don't agree with Sheila about exempting churches, but that's just my sense. Where are you on all of that?
Well, I think the churches have to pay for their stormwater. I mean, I'm all for exempting them from most things, but they're really no different from any other building in this particular regard. Very limited regard, I would add.
So,
well, may I, are we exempting churches out for anything? I mean, we don't exempt them out from water and sewer, I don't believe.
well,
So
aren't they
where-
exempt from property taxes? I think
Yeah.
that's a big exemption.
That's the big one. That's the big one.
Yeah.
Okay.
I guess my sense is I'm prepared to vote for this, although I do like your idea, Sheila, of looking for another breakout in the big commercial. But I understand your position, and I think that we're only 3 people out of 9, and I think that that's something I'd be more than happy to see some alert to the council in general that this is something that's lurking underneath this resolution that all of the council pay attention to. And we can also supply them with the PowerPoint presentation that we got today, and we can ask for more of the breakout that we asked Michael to give us, and we can get through Marcia. I think you're not alone, Sheila. I think, and this was a big issue in the county, very controversial, and I think it's going to be controversial in the city as well. So, how do we proceed, committee?
Well, hadn't really thought much about that part.
I don't have a problem with everything else on here. And I think we're gonna really open a can of worms that we're not gonna be able to harness if we start talking about gas stations versus churches versus other things. I'm not sure we're qualified to make those judgments.
And even
Why
if
not?
Yeah, I mean, we are empowered to, and we're called upon to make those judgments. I guess the real question is, I'm ready to vote in favor of these changes, but I'm not in favor of steamrolling over your concern, Sheila. I'm trying to figure out a way that we make sure that the whole council, the 9 policymakers that get to vote on this, are aware that there's some serious sub-issues here that we can get more information from Public Works in the rate study, so that the people who do the ultimate vote on approving this resolution will be aware of that, and will engage in that conversation.
Alderman Arnett, could I suggest that you just vote to ask for additional information on this, and then Public Works can get that together to present to the full council when the time comes to deliberate on this? And we can put together whatever the additional information that you would like, just so we don't hold up the whole process because of this one.
That's right.
Yeah, I think that's reasonable.
Yeah, all right. Well, that works.
Hi, could I just make a comment? Hi, it's Ellie. Can you hear me? Okay.
Yes.
David, correct me if I'm wrong, but as far as the use, whether it's residential or church or gas, isn't this decision based very simply on impervious area, the footprint of whatever it is? I mean, the land itself doesn't acknowledge whether it's a gas station or an apartment building or whatever above them. It's really how much impervious area they're creating. Isn't that?
That's correct.
Yeah.
Yeah, that's correct. So it's not even the size of the lot, because the lot size is not impervious. So the intent is that it is impervious area.
Yeah, so the discussion of use should be secondary.
Fair to Sheila, I have a lot of small churches in my ward. I think we all do. For many churches, I mean, we're not talking about a gigantic increase, but for some churches, and we have our city attorney with us, so he's going to rescue us. But I just want to finish that thought. For some churches, this is going to be a heavier lift than for other churches. I agree from the theory of the environment, wherever the water's running off from, whoever's the owner, it's still stormwater runoff, and it carries pollutants, and it adds to our TMDLs, and we have to find a way to address it. But I know what Sheila's raising is a very sensitive topic, and I think we do need to get more information. But let's hear from Mr. Lyle.
Yes, sir. Thank you. I just wanted to offer that we should be careful here because we are potentially engaging in discussion about relief based on religion. And I think we need to be careful, and it requires further discussion. There are other ways to get at, I think, what you want, but we very, very much need to be careful because we may face attack from other organizations who see the unfairness solely based on religion as opposed to some other practical reason why we might want to exempt this specific category of human endeavor.
Well,
Thank you for that.
can the practical in all of it be that, although yes, the church does have maybe the same size lot or impervious as the gas station, the church is only, you know, being used on Sunday with high volume of negative fluids flowing into the watershed. Meanwhile, a gas station is used daily. So that's not looking at it in the eyes of religion.
And that is the kind of discussion and reasoned approach you would need in order to avoid attacking the rule. We need to think up some approach that looks at it from a practical sense and not because of who's in the building. However, I would say too that churches may, in an analysis that we conduct, may have more pervious surfaces. They may have more concrete or asphalt parking lots as opposed to gas stations, which are smaller and people come and go. And what you're talking about is not a lot of pervious surface there. You're talking really about the churches who have more parking lot than gas stations do. But that's the kind of analysis you want to do as opposed to looking. And you may find that there are other organizations, nonprofits that fall up in a category, and then we're taken out of the discussion just because they're churches. So I agree.
So the city manager recommended that we might want to essentially punt on this by a motion that would point out to the council that there's more information. This is not, there's a lot of things under the hood here, and that DPW is going to be forthcoming with more details, and that this is a topic to be debated on the council floor, and probably will take a lot of council time. But City Attorney Lyles, I appreciate your weighing in. I think you're right. We're on some slippery slopes here, and we better be sure we know what we're doing. So is there a motion? And Sheila, you're on mute.
I would, Takia muted me.
I don't blame her.
I would hate to hold this up. I still would like to further the discussion with Mr. Lyles about how we can do this. But I have serious concerns about that list. And if it's just impervious surfaces, then there was no reason for Mr. Hyde to give us that list, which had the number of churches, the number of gas stations, and the like. We had an opportunity to really see the disparity in the fees. So that's a problem. That's a problem. So, Mr. Chair, you want a motion to postpone action on this section until?
No, definitely not postpone. I have two minds. One, we can go ahead and have a motion recommending this to the council from the majority of the finance committee. The other proposal that I heard from David Gerald was that we recommend that more information is forthcoming from the administration, and that we're not going to take a position. We're going to defer to the council for this particular section, which is 1710 180B, and let defer to the council to take the final action on this.
Well, I'll be very honest with you. I would hate for us to get into this discussion during a council meeting. Not that it shouldn't be public, it's just how long it's going to take and whether everyone is going to have all of the information that we just saw in Mr. Hyde's presentation. because that's what has triggered the concerns for me.
Right.
So I would hate to put this off until the city council acts on it. I would prefer we have a motion from the finance committee, and then I can work, and maybe Alderman Gay and any others who would like to come up with amendments to this.
That's
on the
perfect.
floor.
I appreciate that. So I think then the motion would be for the finance committee to recommend approval of these fee changes. And then we will still want to get more information from DPW. That's not part of the motion, but that's the part of the expectation. And I don't know how we avoid this being discussed at the council. The majority of the council is going to have to vote for this or for some change.
Well, I'm not suggesting we won't discuss it, but I would really hate for us to take an hour out of our deliberations on the budget to deal with this one item. And that's, the potential for that is very great.
I think it's pretty
Only
much,
an hour?
yeah, I was going to say it's pretty much a
I'm
certainty.
being generous. So anyway, I will make the motion that the finance committee recommend approval of the changes to the fee schedule in 17.10.180.b.
Is there
I'll
a second?
second that.
All right.
Before we move on, is are the churches paying the watershed restoration fee now?
I think they must.
Jody, do you know? I believe that they are. Jody, do you know that for sure?
I have never noticed it personally, but they should be. They're not exempted. And when we were in our meetings and we were talking about the pervious surface and our maps and stuff, we didn't talk about anybody being exempted, so they should be.
Yeah.
Okay, that seals it for me, but at any rate, that maybe not for everybody.
I think that's it for red lines for a little bit, but while we're in Title 17, and since we've monopolized so much.
We got to vote on that?
Oh, yeah, I'm sorry. All in favor signify by saying aye.
Aye.
The ayes have it.
Mr. Chair, I have all the red lines for parking fees. Did we do these already?
No, that's at the end of our presentation. There's parking, there's all of the fees for parks and recs, and as usual, we're at 12:07 and we have a long way to go and a lot of people waiting to help us.
Well, Kevin's one of the few squares that I can see on my show, and he's been patiently waiting. Why don't we
want to
try
put
to
a marker down for Title 17 on the fees that deal with long-term, short-term, bed and breakfast, inspection fees and other fees. Since we kept John here, I think that there are some equity issues of why it costs more to do a short-term rental inspection than a long-term rental inspection, and why it costs a lot more for doing a bed and breakfast because that's charged by room. So that is something that I will want to have a discussion with planning and zoning and John in particular, but there are no changes proposed in this schedule. So I think we zoom on through to, do we have any in Title 21? I think we're done with red line changes to up to parking fees, if I'm correct.
I think we are too.
Yes.
All right. So at long last, we have.
We have one fee change in planning and zoning.
Okay, what is that, Sally?
It's for historic district fines. Oh, I'm sorry, it's not a fee.
That's fine, yeah. Yeah, it's fine.
I'm sorry.
Yeah. And I think we're going to be fine with that, but we have to get to that resolution. So now we're at parking fees by garage.
Can we scroll down till we get to the first changes? There's a lot of red line items that I think they redlined all of the original fees, and then there's a new sheets. I mean,
Do,
That is correct.
do we have this document individually and like this red line document?
Yes, it's in Granicus, and the fee schedules themselves are in your budget binder towards the very back, not at the very end, but towards the back, because we also have fees for parks and recs and latchkey and alcoholic beverages.
going.
Dwan, I'll be happy to email it to you when we're done. Maybe I can do it now. I'm not sure.
Okay, thank you.
Oh, Takia's on the ball.
So, Kevin, I think this is you. Oop, you're on mute, I think.
Are you muted?
No, yeah, we need, well, actually, Director Gordon.
Yes, I'm on as well.
All right.
If you back up to there was a narrative page that sort of summarized the changes in the various garages. It was maybe 1 or 2 pages back.
Okay.
It's just 1 page back. It's a blue
One
page.
page back, yes.
Yeah.
Well, I'm not finding that.
Because our red line sheet, the next page and on, doesn't tell us what the changes are.
Correct.
So we jump forward actually in my red line to this page, which summarizes the changes. Okay, that makes sense. So, Rick, are you going to do this, or is Kevin?
I can sort of walk you through this page and then we can move on from here. Starting with all the garages, the special rates on Sundays were extended to those who entered after 6 and exited at 2 p.m. In the old rate, FY20, the schedule required patrons to exit by 1, so it simply backed it up an hour to 2 p.m.
Excuse me, Mr. Gordon.
Yes, ma'am.
This begins with the daily rates on Hillman. Is that what we're going through?
No, at the top, it's all garages.
Okay, okay, you're looking at the narrative. I guess that's what we should, but you're gonna then take us to the next page and go through.
Yeah.
Okay.
Right.
Oh, so the special rate primarily applies to the churches, obviously. Those are most of the patrons that use the garages on Sunday mornings. And what we found was we needed to extend the exit time to 2 p.m. That is the big change there. The next was to simplify the park and shop rate to 1 coupon was equal to 1 hour discount. And it removes the $10 special event rate from all garages. Excuse me. Park Place. All garages, the next one applies to all garages except Park Place. And it basically changes, it charges, I can hardly read that, changes no charge for the first 2 hours for residents to a credit in the amount not to exceed the cost of 2 hours of parking. This basically, the way it reads was to ease the administration of this provision, 2 hours of free parking. It essentially doesn't change anything. Just it tries to make it easier to understand.
But Rick, in this case, does resident mean city resident or resident of Park Place?
City resident.
Okay.
This applies to all except Park Place.
What would the
Gotcha.
what is the exception for? It says extend special rate on Sundays to those who enter after 6 a.m. and before 2 p.m.
I'm trying to find out where.
It's back up at the top.
Can you repeat that again, Alderman?
Yeah, it's saying if you come in after on Sundays, if you come in before 6 or after 6 and before 2, you get some exception.
Yeah, that's primarily, like, as I said, for folks that use the garages to go to church.
Oh, they don't pay at all?
That's correct. And And under the all garages except Park Place, the last bullet, it increases the lost ticket rate to 3 times the daily rate. We found that to be the case because the way it was, folks were essentially ignoring it. The rate was so low that everyone was ignoring it. And Kevin, you can correct me if I'm wrong. So we wanted to make it consistent and make it 3 times the daily rate across all of the garages.
Yep, this is John Kemp. Kevin is on as well.
Hey, John.
We're both on. Yep, that is absolutely correct. And I just wanted to underline your earlier point about the bullet above related to the administration of the 2-hour discount for residents at all garages. By changing the language here, it's going to enable, eventually you'll have different parking equipment, hopefully sooner than later at garages. And the functionality of that equipment, regardless of what's selected, will support the program in a way that gets away from distributing a bunch of validation tickets, which you might be familiar with now. Your residents certainly are. They have to repeatedly come in and get these tickets, so it's a burden to the customer, and it's costly and not very controllable. So I just wanted to highlight that no change to the actual program. In fact, it benefits folks at garages. It benefits folks a bit further, but the administration of it will be much easier to deal with for both the residents, i.e. the consumer, and us, or the city of Annapolis as the administrator.
But I'm not sure how it works. I mean, it says it's changing it to a credit. Credit to what?
The value of 2 hours of parking at the Hillman Garage.
Yeah, but right now we just stick a blue or yellow, whatever color it is, into the meter, and it gives us the credit. Is this changing that system?
Not today, because your equipment's not changing, but your equipment's going to change. And when it does, we'll be able to administrate this by not having to constantly distribute tickets, but rather have a more solid credential that the user will be able to hold on to and use over and over and over to get that same discount, but not have to come to the office once, twice, 3 times a month to get tickets.
So years ago, we used to have a sticker on our windshield, but that
Correct.
was the things were personed by somebody. Now you're saying we're going to have a permanent resident card that we would, like a credit card sort of a thing?
Yeah, like an access card, almost like a monthly
correct.
parking access card. Correct.
All right. Well, I think once we figure out how to distribute that, I have a feeling my constituents are going to be much happier with that system. So
Right.
it's like a good move.
I have a quick question back to the original bullet point. So do the churches pay any, like maybe a set fee to the parking garages?
No,
So they don't contribute any funding at all?
no.
It's
And
taken out of their stormwater management fee.
I know, yeah, that would have been, yeah. I realize the irony in bringing this up now because we just talked about reducing the fee for impervious surfaces, but that's interesting to me that they pay not a single dime for parking that would traditionally be used, especially in busy months, by tourists or people visiting the city. And there are also several churches in the downtown area. So is that the case for all the churches? For example, there's a church on West Washington, I believe, and as well as Asbury. Would they have access to park in any garage downtown from the hours of 6 to 2 without paying a single fee?
Yes.
Yep.
The city garages, yes.
Okay, perfect.
Park there all the time. First Presbyterian and St. Mary's use the Hillman Garage in the same manner. And if you're talking about tradition, I think the tradition we have is that they don't pay. That's all. I can't remember ever charging churchgoers, a parking fee.
Well, at that time of the day, the garages are fairly empty, 6 a.m. to 2 p.m. on most Sundays, and it helps.
Yeah, as you get toward noon on a Sunday, I would agree that they begin to fill up, at least the Hillman does, but I don't think it's a big deal. I think it's a nice courtesy, and I don't see it as a problem.
I guess it would be interesting to hear what the Downtown Annapolis Partnership thinks about this and whether it impinges on the retail stores, if they ever open again. The retail stores, say on Main Street, if the lots are full with church attendees. I have no idea what that looks like.
Well, they'd probably favor it because they would encourage people to take advantage of that and then go eat breakfast, or, walk downtown and pick something up. I would assume. I think typically people, they use it for an hour, hour and a half, however long the church service lasts, and they're gone.
Yeah, depending upon whether they leave right after communion or not. But I guess
or get there before the offertory. Yeah.
So
I just to remind that Whitmore is not a city garage,
That's correct.
but Gott's is. So it's Asbury and First Baptist were mentioned by Alderman Gay, but their closest garage is not a city garage. I don't know what.
I forgot. I know the First Baptist uses GOTS a lot, and I think they use it for free. The county doesn't charge them.
Have we heard anything from Annapolis Partnership about the churchgoers impacting the availability of parking in any of our city garages?
I have not personally.
This is John Kemp. Yeah, no, I haven't heard that either. I mean, the one obvious not obvious, but the one conflict that comes to mind would be most in play on, say, a first Sunday.
Yeah.
But no, Kevin, unless you disagree, I mean, in all my time here, I'm not hearing conflicts that are affecting, to the point where we're running out of capacity. In this case, GOTS is the one that would be ground zero for that activity.
So on a regular Sunday, when everybody's going downtown, having brunches and, all of that stuff, how much revenue do you think we lose out on because I could not be going to church. I could be going to, Ruth's Chris or something, and I just park there from
correct.
6 to 2.
Mm-hmm.
So, how much do we actually lose out on that revenue? And I know this might not be popular, but I think a flat fee of $250 a month or something for, if you're utilizing the service, we now have staff there that are out, on Sundays when church gets out or it backs up and they're standing there with the card or, maintaining the gate. So it's not as if, everything's flowing itself. There's definitely high demand during this time. And I think that if there's room for revenue, I think we should take advantage of it while we have this opportunity.
I think at $250 a month, the administrative costs would probably outweigh the revenue from the fee.
Yeah.
You might get in a situation. Who would you charge $250 to? Because then you're sort of flipping it on its head. In that, would Ruth Chris pay $250 or just churches?
Very good question. I like that. Yeah. Interesting.
By the way, Ruth Chris, you have to walk across the bridge for.
Yeah.
I was just throwing it out there. Any fun. I could be at Chicken Roots.
Right, there you go. Alderman Gay, your question about lost revenue is a good one. We'd have to go back and look at usage data, which it just takes a bit of time, but we'd have to go back and look at, entry and exit data on Sundays to.
Is that easy? I don't want to make it extra work for you.
It's not easy enough to do right now while we're on the call, unfortunately, but we could probably get it together in a couple of days. So.
All right. Thank you, guys.
Dwan, this will be coming from the Finance Committee to the council, and hopefully we can get that information for the council deliberations. We're way over time already. We need to get through this and get to the actual fees if we can.
Okay, can we move on? I'm down to Hillman Garage. First bullet, remove special rate of $5 for Monday through Thursday, 8 p.m. to 6 a.m. The next bullet, restricted weekday pass Monday through Friday, 7 to 7, increases from $190 per month to $225 per month.
Director Gordon,
Yes.
could you tell us, so like, who's getting this $5 rate? We need to know whose ox is being gored by these changes, because we'll hear about it. So who is getting this special $5 rate now?
It's any entries during that time frame, entries and exits. As long as the entry and exit meets that
The time frame.
that enter after 8, exits before 6.
So is this will this increase revenue or decrease revenue?
Should increase revenue.
419695. This meeting ID does not exist. Please re-enter your meeting ID.
Should increase revenue, but not affect it's not employees are not typically coming in after 8 p.m.
Right. Okay.
So you're not negatively impacting there.
And what is the restricted weekday pass?
That's a monthly parking. So there's two monthly parking products, if you will, typical in each garage, and that is a 24/7 pass and a restricted pass that is as stated here, Monday to Friday, basically working hours pass, which is a yeah.
Is that what the families of the St. Mary students typically purchase?
No, they don't typically purchase anything.
So they're just paying the straight out rate. So don't a lot of them have parking passes that they use?
I don't believe
Students do.
Yeah, that's what I thought.
Not in Hillman, we don't have very many.
No.
They can't get them, they're too full.
Okay.
A lot of parents come in and wait in Hillman for 15 minutes and pick the kids up.
Right. That's
exactly. They work the grace period.
Okay, but this is a rate increase, so it increases revenue.
Correct.
So this is Jody. I just wanted to interject. I noticed that there are other businesses that are here in the downtown area and their employees are parking in the garage. And I suppose they're the ones that are getting these monthly passes.
Some, yes.
John, do you have a list of those businesses? I think MSCA is one that had about 40 passes. Or 20 some passes, I guess, last time I heard. But I do recall when we had a lot of students from St. Mary's who had these passes. And I remember some of them coming to us when we changed the fees. It's been years, but but things change.
Yeah, there really aren't students using this pass.
Well, there's somebody piling out of the garage around 3 o'clock. I mean, and they sure look young to me, and it's a car full of teenage-looking people.
Yeah, they leave, but they're not parking from. They're not using the pass to. Oh, I see what you're saying. Yeah, they're not. I mean, we don't, Kevin. Again, we don't have. The students change. I mean, there's been a waiting list at Hillman for quite a long time, and so students that may have used this pass years ago, they're gone.
Okay.
We do get
a
lot of Alderman Arnett. The parents oftentimes will park in Hillman and wait for the kids so they're not on the street and then leave, and they use that grace period so they're out in 15 minutes, or they're residents and then they put their coupon in and it's free.
Okay. All right. Well, you're the expert, so.
And with the updated, almost like credit card residential, will you be able to cut down on activity like that? Because to me, that's just, I don't know, that's just not right.
So are you referring to what the St. Mary's parents do?
Yeah, and just in general, how the street is usually completely blocked. That's bad for your business if you can't even turn out of the garage during that
I think that because of the location and the way that it's designed down there, that the physical street itself, logistically it works because people get off the street. Otherwise, you wouldn't be able to move at all. And it runs for about 15 minutes, just as kids are being picked up and they're out. That grace period was put in place so you can get in and out of the garage. Just say the space is full, where the garage is full, so you're not paying if you're driving around. Or when you actually physically pay at a pay station, it gives you a chance to get from the pay station to your car and then exit. So that's what that 15 minutes is really set up as. So it actually does end up helping.
And Duan, some of this is of our own making over time because I think this is still the case, and I'm checking this out. We don't let students go out of the back side of the St. Mary's parking lot and through the neighborhood. So pretty much everything is forced to Duke of Gloucester or the garage or down on Main Street. A lot of parents wait for their kids down on Main Street. They walk down Green Street or whatever, and they get picked up on Main Street. Some kids, I know Lily Openshaw's kids used to go from school to the market house, and they'd get an ice cream or something, and then she would come by later on and pick them up.
You know,
they used to have the back gate on Shipwright Street open too, and enough residents complained about the traffic backups and buildups that they don't allow it anymore. St. Mary's agreed not to use the back gate. That would probably alleviate some of the traffic problems. But
yeah, and I look at it as, it's a private school that charges a pretty penny, for tuition. So I think that at least, I don't know, I think that just, paying a little bit, contributing a little bit to either SP or to the city or in some way to help with traffic flow issues and to general parking issues in the garage during that time. I think that, again, I go back to the 250. I don't know why I like that number, but just throw us 250 a month for some.
Duan, you need to go to Mass on Sunday. The political people that are in church there, including Mike Bush, unfortunately no longer with us, but I think you're bucking quite a tidal wave.
I still would like to have a list, though, of those pass holders, please.
I've made a note of it.
Okay, thank you.
Do you just want it for Hillman or all garages?
I'm sorry?
Would you like them for Hillman or for all the garages?
All the garages, I guess. Hillman is my concern, because I've heard from the businesses down there in the past, and I just want to be prepared this time.
Okay. All right, moving on to GOTS. First bullet extends the special rate of $5 for 8 p.m. to 6 a.m. to all days of the week, not just Monday through Thursday, as it was in the 2020 fee schedule. And obviously that's an opportunity to get greater use out of the garage. The next bullet adds free parking at GOTS for the visitor centers with a coupon. Next clarifies hours for employee evening rate, enter on or after 3 p.m., exit by 6 a.m., and the employee must have a coupon. Next group.
Mr. Gordon, how many of those coupons do we give out to local businesses?
Kevin, can you answer that?
I'm sorry, are these for the
Parking shop?
employees?
Yes.
I'd need to run a report and see what's used. I can do that for you.
Are there lots of businesses that take advantage of this?
Actually, it's not as many as we would think, but I can run a report and see how many are turned in.
Okay, and do they pay a reduced rate for the coupons, or is it free?
No, it's free.
Okay.
They just need to prove that they work downtown, or the business needs to request them.
Correct. Yeah. This is an effort to get their employees from parking in
on the street.
Out on the streets, correct. Where you're not collecting.
Thank you. Night and garage, Mr. Gordon?
Yeah, well, it actually mirrors GOTS. It's basically the same thing. It extends the special rate of $5 from 8 p.m. to 6 a.m. And again, clarifies hours for the employee evening rate. So those are basically the same thing that you have at GOTS Garage. And the last one, Park Place, adds an overnight rate of $25. It increases lost ticket rate from 20 to 40, which is 2 times the daily maximum rate. It increases employee parking rate with a coupon from $2 to $3. Adds juror parking rate of $3 with a coupon, and eliminates the 50% discount with bed and breakfast coupons.
So
So
what
that-
do we do for bed and breakfast if we're not giving them that 50% discount? Do they get a reduced rate at all?
I'm looking for it now. I don't think they do. I don't see it on the page.
We are going to have, not for the budget, because I've been getting requests from bed and breakfast now that we've passed the short-term rental legislation, some equalization of the kinds of things they have to go through versus the short-term rental. So I hold that thought, Sheila. We are going to have to come back and talk about it, but not necessarily with relation to parking fees. I notice on this whole schedule where we don't have anything about surface parking. I know we see Larkin and others, but one of the things I thought I remembered in discussions with SP Plus is we could generate a lot more revenue by charging at our surface parking meters beyond the current time. When do we stop charging at 9 o'clock or something like that? And we have people.
7:30.
Pardon me? 7:30, yeah.
7:30.
Shouldn't we be thinking about charging till midnight? I mean, people are certainly down there parking that late. I know the council is after council meetings.
We would.
Yeah, John, this is John Kemp. Yeah, absolutely. Those fees are not part of the fee schedule. They're directly in the code.
John, do you have the data for the revenue that we got for increasing the city dock meters, just to give an idea of what that does?
I can look for it here.
But Ross, you can sponsor that one. I'm not going to go through that again.
Ellie, I will.
Yeah.
The same way I'm going to sponsor the legislation to make Duke of Gloucester 2 ways, so you don't have to get involved with it. But yeah, I think that this is a lot of parking revenue foregone, and largely the people using these meters are not city residents. They're people coming to town to dine and drink, and particularly later hours to drink. And they do cost us in terms of having to have more police down there and things like that. So I think it's a very equitable thing to do. And I'd like to suggest that we, maybe not for the budget, but sometime soon, get into that change to our surface parking meters.
That would be a tremendous help to us when Hillman goes offline as well.
Yeah.
Back to that change that that Alderwoman Tierney alluded to, that was on, just specific to City Dock, which we all were remember, during a short period of time at the end of, we'll call it peak season last year, we saw about an increase of 30 to 35% of revenue compared to the same period the prior year.
Yeah.
With a negligible drop in volume, it was 3%, which really could be attributed to anything.
Yeah, the volume drop was the real surprise. That shows the laws of supply and demand at work. This is very price inelastic, and we should take advantage of our market power.
Yep.
Yes. So that the experiment, I mean, I know I got a lot of pushback on that, but it was an experiment and it proved successful. So I just wanted you to know that.
Mr. Chair, I am looking at the next sheet of our red line Parking fees, Hillman Garage is the next page, or Mr. Gordon.
Yes. And
Go ahead, I'm sorry.
what I went over with that initial narrative is basically what you see on the next few pages.
Well, I have a question or two, and I'm looking at the Hillman Garage page, towards the bottom, it's about the coupons. 4 coupons maximum. And these are coupons they go to the office and pick up?
Yes. Or I think they can get these from vendors, Kevin, am I correct?
Market shop, yes, that's correct.
Yeah.
Okay, and can all of those coupons be used at the same time?
Up to 4.
Up to 4 at one time.
So up to 4 hours at one time they could use coupons for. Okay. And I see the fee for the shop owners who get coupons. That's 55 cents. And then the last item is bed and breakfasts. You just said that you eliminated the 50% discount bed and breakfast.
That was at Park Place.
Oh, that was only at Park Place.
At Park Place, yes.
Okay, so 50% bed and breakfast coupons is item 4 Hillman, as well as Gott's, as not Knighton. Yeah, Knighton too. So all the garages except for Park Place gets bed and breakfast parking. Okay.
Michael, stop me if I'm out of bounds here on the bed and breakfast thing. But does that require legislation to eliminate the Park Place, or the fact that it's not technically a city garage? We don't have to change the code on that, because I know that is in the code. Is that just something we should look at, Rick?
Okay.
What, you know what I'm saying?
Yeah.
It's a code requirement when the whole 20 years ago thing. So, okay. Just let me know and I can do that. Maybe I'm not the one. No, I can't do it.
Yeah, we need to take a look at it. I know almost nothing about it and just need to up to date on it.
Okay, thank you. Yeah, okay, thanks.
For what it's worth, I just got an email back from Eric Evans about the Sunday morning downtown parking, and the merchants are happy with it as it is. He didn't explain, but he just said they're good with it.
Good to know.
People asked how the merchants felt about it downtown, and they're positive.
In the interest of time, do committee members have, I mean, what we're seeing on these following pages are just simply laying out all the different fees. Sheila, you had one specific to Hillman on the coupons. Otherwise, all of this just lays out what Director Gordon just went through with the summary page. Are there particular questions about any of the individual garages, or Director Gordon, are there things we need to know about garages that are not really apparent from the?
No, I think we basically covered it, Alderman.
Mr. Chair, I'm ready to make a motion to approve the parking fees as listed here.
And that's all the way through the South Street lot?
Yes.
All right.
I'll second that.
All right, further discussion? All in favor, right, signify by saying aye.
Aye.
Takia, do we have that one notation that Ellie brought up about needing to go back and look at the code for parks, for Park Place and the bed and breakfast?
Yes.
All right, so, well, I think this was a very thorough report. I found it to be quite informative, and I hope this is going to generate a lot of new revenue for us in parking, particularly to tide us over whatever happens with Hillman. The next thing we have, I think, is transit fares.
I don't have a sheet for transit fares. Do we have?
There's no red line change.
Yeah, there are no changes.
Okay.
So that takes us through Does that take us through everything, Rick, in terms of transportation? It does.
Yes,
So
it does.
on last, we can get to, I don't know who's doing alcoholic beverages or if there's any changes there. There are. No, I think we're ready to get in long last to Parks and Recs. Changes there.
And is Archie on to talk about this? I think we made one change that I recall.
I see the swimming pool changes, but these weren't these just recently passed at City Council? Are these the new changes?
Yes, they should mirror the ones that were just passed. There would be no change from those that were just
Right,
passed.
yeah, they were just passed on Monday.
So
There's Archie. Archie's on.
we made you sit through this to get to this where we've already agreed to the changes.
Yeah. 2 hours.
All right.
Well, let me ask. I thought I had proposed that the children's rate would not change to $5. Did we change it to $5?
No, we didn't. We had agreed that it would stay the same from last year.
Okay, because this is not the same. What I'm looking at on the red line says that it's $5 a day. And
Well,
I
the
thought,
Yeah, the red line says that it's July 2019 through October 2019. What we just passed is more current than that, and that's,
Yeah, so this probably reflected the original proposal and doesn't reflect the changes that were made during the process, because this was submitted a while ago with the budget.
We'll have to
Right, that's true.
run through some amendments to change these fee schedules based on what you passed. We were doing these things simultaneously, so.
right. So that would be, I think, the recommendation from the Finance Committee is to update this part of the resolution to be commensurate with what the council passed at its last meeting or whenever that was.
Yes.
So is there a motion from the committee to recommend amending the fee schedule to reflect recently passed pool changes?
So moved.
I will second it, but I need discussion because I want to be clear that the city resident child hasn't changed. The
Right.
fee.
And that's what we passed at council. Was
You
not
passed it
to
at
change
council.
that.
Yeah.
Was one of the amendments.
Okay,
In
Then I
our, oh, go ahead.
I'm done.
We have a motion seconded. All those in favor of recommending that the fee schedule resolution be amended to reflect the current swimming pool fees. All those in favor signify by saying aye.
Aye.
The ayes have it. There is the last section of the fees, which has no changes, are for all of the alcoholic beverage fees. I know we've heard from people from time to time. Brian Callahan just mentioned this to me recently, but I don't see any recommend for change, so I would assume there would be a motion from the committee to recommend to the council they approve this portion of the fee resolution.
I will move that we give a favorable recommendation to the remainder of the fee schedule.
All right, so at this point, let me be, I want to thank SB Plus and Director Gordon for helping us through the parking. And I wanted to thank Director Trader for suffering through what was a very short moment of glory. I think we can let people go that have already done their work before us and with our thanks.
I'll second Sheila's motion, by the way.
Yes, all right. So I think that, so all those in favor of accepting the alcoholic beverage fees as stated in the resolution 26-20 signify by saying aye.
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 I think we are now through the resolution for fees. Unless comment, again, thank the committee. I don't know that we've ever done as much due diligence or as thorough a job. I think part of that is because of what the finance department and other people put together for us so that we could look at this efficiently. So I want to thank them. And I guess at this point, we need an overall motion to recommend the resolution.
Adjourn? I said adjourn.
We got one more piece of business. Recommend a resolution.
Just kidding, just kidding.
Yeah, well, we're almost there, Fred. Recommend resolution 2020 from the Finance Committee to the council with the notations that we've made during this process. And Takia has her hand raised, so I must be doing something wrong.
I just have a question before you recommend overall for section 16.16.160. You asked to postpone until you received additional information from Public Works.
No, I think we passed that, but we did ask for additional information from Public Works. Am I not correct, committee, in my?
You recommended favorably for significant industrial users per discharge location. And then when you got to the next one, you didn't recommend anything favorably under that one.
We're talking about 16 what, please, Takia?
0.16.160.
Yeah, we didn't go through all of these because
you did
there's
not. You postponed it.
food permit.
You only did the very first one.
Oh, all right. Well, this was the recommendation from the rate study. I know, there was a question. That's right. So if you look down on that page, the non-resident users, the application fee for a 1-year permit was $130, and the application for a 3-year permit was $100. And we were going to get a clarification from Marcia about, shouldn't that be $300 or shouldn't be less than for 1 year?
And whether it was $100 per year for that 3-year permit, or whether it was $100 for 3 years.
Correct.
Is that, Marcia, do you know anything about that off the top of your head right now?
I think that's what it is. If they want to get a 1-year permit, it's $130 per year. If you want a 3-year permit, it's $100 per year, but you would so you would pay $300 or the additional $30 per year if you just wanted 1 year.
That makes sense to me.
Yes.
Yeah, I do think.
Recommend an amendment to this at that 3-year thing to add per year $100 per year, and then recommend that forward to the council.
I'll make the motion that we add the words per year under application fee for 3-year permit.
The other way we could do it was change that from $100 to $300, and then we just amend that because that comes out to $100 per year.
Well, the recommendation is $100 there, and with clarification. So, I mean.
I'm good with Sheila's motion.
All right. All right. Any further discussion? All in favor signify by saying aye.
Aye.
So now the committee has recommended the red line changes for 16.16.160.
No,
you didn't.
there are several other changes.
Yeah.
on the second page, the next page over, we have automotive, automotive annual permit fee is new, $200. It's the very next page after the we're just dealing with. And then there's another 2 pages over, there's a Class 1 annual permit fee under food handling permits. Class 2 annual permit fee, still under food handling permits, $240 a year.
Yes, you're right. There's,
Marina permit fee, $200 a year. These are all the new ones that I'm seeing. Photo processing annual permit fee, $200 a year. I think those are all the changes.
there were a lot of them. All right, I'm finding automotive. So, Marcia, can you help us understand, in the red line, it's showing simplification of fee structure proposed by DPW for a lot of these. It looks like for some of these, the fee is actually struck. Permit fee, $100. Hard to know exactly what's going on here.
I think the problem is, okay, so when we restructured it, and then to the fees, these hadn't, as I mentioned before, this is part of the wastewater pretreatment program. These fees haven't been, the structure hasn't been updated in probably about 20 years. So some of the classifications have changed slightly. It's much less confusing to look at it in a different format than this. I think this format, because of the red line, is a little overwhelming. But basically, a lot of these fees, you did see that the significant industrial user fee went up, and a lot of these are due to we have fees that we pay or expenses that we pay a lab that are paid by the city, so that the permit has to cover the lab fees. But we restructured them, and really, if you look at them, which are hard to look at in this format, I admit, a lot of them actually went down a little bit because of the way we restructured them. So, I mean, the automotive group, what was Class 1 was $385, is now $300. Automotive 2 was $220, and it's restructured to be $200. Food handling,
$200 per year.
Per year.
Right.
These are annual fees. Their food handling, there used to be 2 different classes of food handling, and now it's there's just that fee was actually averaged to be $240. Conventional pollutants, which are part of the funeral home and laundry, they were restructured to be a $120 annual fee and $200 plus costs of the other residential user fees for marinas. So the fees were actually just restructured. There wasn't a huge dollar change. Is there a way I could, I don't know how to, I want to make sure that you're comfortable with passing this, but I can provide you with additional information in a clearer format if you'd like. It's just, I know you're trying to pass it now, so.
I think that in the resolution itself, what we see is the final recommendation for all of these things. So I see in the resolution without the red line, I see the automotive 1 annual fee permit is $300. Automotive 2 annual permit is $200 per year. Conventional pollutants, dental 2 some of these categories just drop out. So the final version of it is in the resolution itself. Let's see. This late fee.
Mr. Chair, I'm afraid I'm confused because what you're reading, and I'm looking at the red line copy, it makes it appear as if there's a change when, according to what you just read, there is no change.
No, the red line drops out a lot of stuff. So if you actually look at the resolution itself under Title 16-160, you'll see there's many fewer categories than you're looking at on the red line view because a lot of them have been dropped. There's only 1, 2, 3, 4, 5, 6, 7, 8. There's only about a dozen categories, whereas when you're looking at the red line version, there's a lot more than that. So if you look at the final resolution, you see all of that red line information clarified, and just what ends up in final, which starts off with industrial users, the fee is $5,385, late fee $25, annual fee non-residential users, the application is $130 for 1 year. That's the one we changed, was $100 per year for a 3-year permit. The 2 automotives, conventional pollution, 2 dentals, the food handling permits, 2 classes, the marina, photo processing, and then there's another category, annual fee permit, total of laboratory costs incurred by the city as determined by the Director of Public Works. That's kind of an interesting discretionary one, and then ends up with this $25 late fee, which is in the red line version is unchanged.
I think the confusion is that most of this is redlined to delete these fees. And as you said, I think I counted 9, you got 10, I probably missed something, have been merged and clarified into fewer categories is what I'm seeing. So the $300 automotive fee, and the difference there is, it said class 1, I guess, originally, and it's been changed to automotive annual permit fee. That $300 is not different because that was in the original.
Right, and then there's an automotive 2 annual permit fee of $200 per year. So there's
right. Yeah. So everything else is deleted, and then it goes over to the conventional pollutants and the the dental. So I think the changes are here. It's just kind of convoluted because you have to find it amongst all the things that are deleted.
Right, but to me, the ultimate result of all of the changes is in the actual resolution itself, and all of those deletions and everything else is distilled out. The only change I think we're recommending is for the non-residential user application fee for a 3-year permit is $100 per year. Other than that, everything else that's in the resolution for this particular section is as is presented in the resolution. So the committee action would be to recommend to the council accepting the resolution for the fees for section 16-160 as amended.
Well, I'm good with that, but I don't see the resolution with I have the resolution in front of me, R2620.
Right.
But I'm not seeing, you said there's a list in the resolution. I'm not seeing that. The resolution is only 1 page. So where's the list of the changes in this section? If you say they're there, I will believe you.
The list of changes would be in the red line version. The actual resolution itself reflects all the recommended changes, except for the one editorial change we made. So if you look at the resolution itself and you find 16-160, and you go down to non-residential users, application for a 3-year permit, we made the editorial changes $100 per year. Other than that, what's in the resolution accepts all of these different changes that were in the red line version.
My resolution is 1 page and it doesn't specify 16, 616, whatever that.
Look at resolution 2620?
Yeah, it's 1 page is what I'm looking at.
No, it goes on for 50 pages.
Well, that's the fee schedule is
That's
what
the
you're
fee
talking
schedule.
about.
Right.
I'm looking at the resolution itself, which is only, the one I have is only 1 page. So what I'm missing something. I have the
resolution of 1 page recommends that we accept all of the fees that follow, which is about 50 pages of fees that we've been talking about all this time.
Okay, I thought you were saying that.
You made a catch. You said, hey, we got to go back because we didn't approve everything that's shown as changes for 1616 160, and you're right. We didn't vote to accept, recommend to the council the final version of the fees after red line changes. So that's what we were doing now. And then we would go back and recommend to the council that they accept resolution 2620 with the few changes that we recommended from the finance committee as it's presented.
Okay, so do we have a motion on the floor?
The motion that I had asked for was a motion to recommend to the council acceptance of resolution 2620 with the amendment from the finance committee, which are relatively few.
But you also have to, so are you going to approve the section before you approve the entire resolution, like you did for the other sections?
Yes.
And
you're saying we need to go back and approve 1616 160.
Right.
And I agree, we need to do that. So we've gotten kind of caught betwixt and between here. Is there a motion?
There's a motion on the floor.
But the motion that's on the floor is referring to the entire resolution.
So how do we get rid of that motion so we can approve, to make a motion to approve 1616 160, which is only part of it?
We'll just withdraw it because we had unfinished business to make sure we had approved the section of the fees 1660 160, and then that would be a motion to recommend the ordinance version of 1616 160 with the finance committee amendment to change the application fee for a non-resident user 3-year permit to $100 per year. That's that was the change you recommended. Otherwise, we accept all of the other changes in the red line version, which takes us to the version that's in the resolution itself.
Mr. Chair, you made the motion, I think, and Fred seconded it. So you're withdrawing that motion. So I'll make a motion that we approve the recommended changes in 1616.160.
With the finance amendment by the finance committee, right, to change that one fee to $100 per year.
Yes.
Yes. All in favor signify by saying aye. Are we getting tired, committee?
Aye.
Aye.
Aye. All right. Now we recommend to the entire council resolution 2620 with the 1 or 2 changes made by the finance committee.
I'll second that motion, or make it a motion if that's what I need to do.
Yes, please make it a motion.
All right, I'll make it.
And I'll second.
All those in favor signify by saying aye.
Aye.
Ayes have it.
Aye.
All right. The good news is there's only one change in Resolution 2720, and that's what Dr. Nash has been and Roberta have been waiting for so patiently, if they're still with us. And it's on the last page of that. It's the fines for, I've lost Granicus.
I'm sorry, what are we looking for?
It's just
Resolution.
a little increase in our fee.
Right. Which is.
What's the number?
Very
What's
last, it is on page 14 of 14, and it's title 2156-120, historic preservation violation.
Okay, I can take it, or Roberta, if you want to chime in, just wave your hand. I can see you if you can't see me. Hi. We wanted to change our fee for historic violations in the historic district to match what they are for building permit fines. Roberta, do you want to add on to this? You are muted. There you go.
That's correct, because the issue is that we are usually dealing with building permits in addition to historic preservation permits, and the violation fees seemed extremely low and not recognized really in any serious way by applicants. So in order to make them more equal, it seemed fair to make them equal with building permit violations. So the building permit violation is 17.12.064. The building code violation is $200 a day.
Yeah, okay, I see that. So, committee, that seems pretty straightforward. Our experts are recommending this change.
Do we want to hear?
Ellie, did you have any, this is your ward, did you have any?
No,
observations?
thank you for asking. I fully support this.
Is there a
Okay.
motion on the committee?
And I'd make a motion that we recommend approval.
I'll second it.
All those in favor of this change signify by saying aye.
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 Have it. Is there a motion to recommend Resolution 2720 with the amendments to the City Council?
So moved.
Second.
All those in favor signify by saying aye. Aye.
Aye.
Let's have it. All right, I believe we have completed the agenda for today. Am I correct, Takia?
Yes.
All right.
I make a motion that we adjourn before anybody comes up with anything else.
Well, I do have a question. Do we have fines, or are we taking those up on Monday?
The thing
That was fine.
That was
wasn't
fine.
There were no changes to fines?
You just did them.
Just voted on.
I can't understand. Too many people talking.
You just did those.
We did the fine, the fees. Did we just do the fines?
You just did fines, yes.
Okay, I missed it. So that the only fine change we had was historic preservation.
Exactly.
Okay.
You were having so much fun that you didn't notice that we did fines.
I was talking to my physical therapist because that's what I'm supposed to be right now.
Right.
Oh, sorry, I missed it.
We had a motion to adjourn. Is there
Second.
discussion? All in favor signify by saying aye.
Aye.
Ayes have it. Jody, do we want to make a